We'll probably skim through that. And as Krishnan sir said we may have a Q&A session towards the end, or we can take one-on-one questions during the lunch break, provided we all are able to leave at 3 o'clock. So the first case study was in respect of sales to restaurants, and I will give a little bit of a background why I have posed this before the group for discussion. Of course, none of the groups have discussed this particular issue. The issue was really in relation to the rate of tax applicable when food is supplied through a restaurant. And the background is that if you go to the earlier provisions of the service tax law, in 2011 we introduced the tax on restaurants, and we said that the provision said it was services provided by a restaurant, and it also said within its premises or at its premises. There was an abatement notification which provided a 70% abatement. That abatement notification also said that services provided by a restaurant at its premises. And these were the words I wanted to really focus on, to really find out that whether these change in words will have any impact today. When we went into the negative list, there was no requirement for defining any services by a restaurant. Effectively everything got taxed. And therefore then we had the negative list exemption, which was given at serial number 19 for a restaurant which was not air conditioned or not having an alcoholic beverage license. And again that mega exemption notification said services provided by a restaurant. The challenge arose to my mind was when you talked about supplies by restaurant services or food services under the valuation rules. And when you go to the valuation rules, rule 2C, again it says that it provides for a 60% abatement, therefore 40% is taxable. And here if you find the wordings are a little different. It says supply of food at a restaurant. And therefore that word between by and at created a little bit of a confusion for me. And that's why I put this case study for our deliberation. Now if I quickly take you through the various situations which we have, there are 3 kitchens. 3 kitchens are serving 3 or 4 different kinds of restaurants or eating places. There are certain clarifications also issued. I'll also touch upon those. The first kitchen is one which is serving or which is being used to serve food in a fine dining restaurant. A fine dining restaurant is an AC restaurant. Clearly it's liable for tax, and therefore there's an abatement available. You pay tax on 40%. There's no challenge to that. There's a second kitchen, and kitchen number 2 supplies to two outlets. One is a sports bar and one is a beachside shack. Sports bar is AC, the shack is non-AC. Therefore clearly again the question arises whether tax will be payable or not payable. And here again the services, the taxes on the services.
Sports bar is AC.
Sports bar is AC. The sports bar is AC, and although it's a single common kitchen, the tax is on the provision of the service, the restaurant services or the supply of food. And therefore you have to pay tax only to the extent of food supplied in the AC restaurant. It's not liable when it's in the non-AC area. So the beachside shack is an open area, therefore it's exempt, or there is no liability. And on the sports bar, which is an AC area, there is a liability. Now, and that is also the clarification given by the circular, and that is that circular dated 7th of October 2013. There was an earlier circular also on this. The question is, of course, what happens in the sports bar? The patrons have an option that do you want to have your food or drinks in the bar, or do you want to have it by the private beach? And again the question will be that when the food is served not within the bar which is AC but a private beach which is an outside location, at what rate should you pay tax, or is there an exemption? There if you see the clarifications issued by CBEC, again that 7th of October 13, and that earlier one also, they have said that any food which is served in an open area, maybe an open area or a pool side attached to a restaurant, they played a little bit of a mischief. They said attached to a restaurant shall also be liable at the relevant time, and now also said that also shall be liable. That means here they are going by the words served by a restaurant, and they are saying since the restaurant is serving you at a private beach, and if this private beach is attached to the restaurant, then you have to pay tax at, it is not exempted, because although the private beach is not air conditioned, there will be a liability for payment of service tax, and once it is liable for payment of service tax, then you will have to automatically be entitled to the abatement of 40%, the 60% abatement, sorry, pay liability for payment of tax at 40%. The third kitchen is serving two locations. One is a 24-hour coffee shop, which is AC, again clearly liable, there is no problem, and it is also catering to room service. We had that earlier circular issued by the CBEC in 2011, where they have said room service are not services provided by a restaurant, and therefore room service is not liable for tax. Now again the question arises that whether room service will be liable or not, and at what rate. Clearly in the negative list, and the exemption only being when it is given in a non-AC environment, clearly room service will become liable. But the challenge arises in respect of the abatement, whether it's available or not. I had expressed a view earlier that to my mind room service should be taxable at 12.36%, and you are not entitled to the abatement. And again my reason is because of Rule 2C. Again, Rule 2C, which provides an abatement, only provides an abatement when it is served at a restaurant. Room service is not food which is served at a restaurant, and therefore to my mind the rate of tax applicable will be 12.36, and the benefit of the abatement is not going to be available. And this was precisely what I wanted to highlight before the group, that these are the dichotomy which has been created, the various conflicting clarifications they have given. In fact, for poolside, they went on to say attached to a restaurant. What do you mean attached to a restaurant? And there is a little bit of a mischief, I believe, where they were not sure. They also caveated it in a way by saying attached to a restaurant. So these issues are likely to come up. But of course, if it is a poolside, they are not likely to challenge it, because they are going to say if it's poolside, if they say it's not attached to a restaurant, then you will say it's exempted. So they will accept your 4.94% liability which you are going to discharge. The question is more likely to arise in the case of a room service. I also saw one or two cases where certain 5-star hotels have a separate kitchen for room service. That same kitchen does not serve the restaurants. It's only for room service. They'll prepare food over there, they'll only serve in room service. Now clearly the benefit of the abatement will not be available, and it simply goes to 12.36%. So that's the challenge which has arisen in sales, in hotel or restaurant sales. The next part of the question is in relation to minibar sales. The question is, what happens to minibar sales? Of course, clarified, so far as minibar sales are concerned, to the extent they are at MRP, it is a sale, there is no liability. I clearly agree with that, there is no problem. The only issue now again being that most hotels, particularly star hotels, will levy a huge service fee. You may have a 25 rupee bottle of Coke which is sold at 75 rupees. And there we have that Bombay High Court decision which says that in a restaurant, food can be served, or even drinks can be served at a price higher than the MRP, because it's not a transaction of sale, it's a transaction of service, and therefore you are not bound by the MRP regulations. That's the only way they could get around the MRP restrictions so far as hotels and restaurants are concerned.
Bombay or Delhi, sir?
So Bombay High Court to my mind. I don't have the citation immediately, but Bombay High Court it was.
Delhi also, because it's
Now, here this issue was, over the years, all hotels have been taking a stand that we, in the room service also, when we charge 75 rupees for a bottle of Coke, there is a service element, because what we are providing is a service to the patrons, to the residents, and therefore this is not a transaction of sale, and they've been getting around the MRP restriction. Now again the question arises that will you be able to change your stand under the negative list to say no, now it is a transaction of sale, I will not be liable to pay tax on this transaction, and it is not a transaction of service. Again, I feel that this is going to be a challenge, it's going to be difficult, and therefore advisable, and what also many other hotels have started doing, they have started paying service tax also on the minibar sales from the rooms, because of the huge service fee which they are normally levying.
full rate.
Sorry? Full rate, it's not a restaurant. We are going to get a contrary view from Sridharan sir soon. Please sir, I'll be most...
I don't know this, but I was just only thinking house as a good idea.
Huh.
For package commodity rules, it will be a service. For sales tax, it's a deemed sale because it will be a supply. And what is tax is a supply as well as this thing. And deemed sale, this negative list, whatever the definition of service excludes deemed sale. It does not say sale portion as deemed sale. No.
So the the service portion anyway will get taxed. So even if we apply that, to say that there is going to be it's a transaction of deemed sale, which is the supply of food as part of any service, then in any event, even at least the service portion will have to be taxed.
One more view.
Yes, sir.
It's actual sale. It may not be sold at MRP because that place is not a retail sales agency. It's not a retail shop where anybody can walk in and buy.
Correct.
So MRP is not applicable. But the guest is getting the same environment, he is only picking up from the minibar and paying for that. So it is actual sale at a higher rate.
It is a sale, and the MRP regulations do not apply at all. Okay. The information which I got and which I understood was that here there are issues also under the Metrology Act, where issues are being raised in respect of the sales in restaurants or even minibar sales regarding the MRP applicability. So it is with this context that I think the industry has taken a stand that to levy the tax at the full applicable rate.
If the levy is valid, then service portion is taxed. I'm sorry, I was making a mistake. You are right.
Thank you, sir. The next is
The notification is issued to take care of the goods portion.
the goods portion.
If that is so, when you served in the room also the same process?
So the question is, in that case, whether you'll be able to deduct it as a goods portion or not, by treating it as a deemed sale as 36629AF, you know. But the better view which I felt, considering the way the transaction is structured and the difficulty in discerning the service element and the sale element, but better to pay tax on the whole transaction. The second is case study goes about a company which is really making various payments to its employees, and also is making various recoveries from its employees, and the question was, the issues were relating to such payments or recoveries. Now a little bit of a background also here is that there was this draft circular which was issued sometime in July 2012. You might have had a look, where there was a discussion by the CBEC to say that whenever any recoveries are made from any employees, these would be transactions of services, and therefore the employer has to pay tax. Also, they said that whenever any salary is foregone by an employee, then that is effectively a consideration for a service which is provided by the employer to the employee, and therefore it needs to be subjected to tax. Of course, a lot of vehement protests and a lot of strong representations had gone at that point in time, and therefore they have not really taken this draft circular forward, and it's just left as it is, or really it's died a natural death. And it was with this background that various questions were raised. First was, of course, in relation to overtime, and whether the overtime would be liable. Clearly, it's a transaction of in the nature of in the course of employment, and there is already in the definition of service an exclusion in respect of services provided by an employee to an employer. But bear in mind that exemption or the exclusion which is there in the definition of services provided by an employee to an employer. It doesn't talk about the vice versa. So that has to be kept in mind whether there will be any liability. The next is a question of referral bonus which is paid for referring new employees, and many companies have this particular practice of giving a small bonus if you introduced prospective employees who are engaged or who are employed, whether these would be liable to tax or not. Now here, of course, there were divided views of the group. This is Divane and Parwane both have discussed this, and there were divided views. There were one view which said that it is a payment in relation to the employment or in the course of employment. There was another view which says that it's not in the course of employment, and therefore it's a separate transaction altogether. So both the groups effectively were divided on this. My take on this is that my take on this is that this should be forming part and parcel of their salary. It's an additional emolument which is given to an employee to incentivize him to refer certain prospective employees. It should be treated as an activity which is done in the course of his employment. There is no separate agreement or a contract to provide this service, and therefore there should not be a liability for payment of tax. It should not be treated as a separate service. The third question was in relation to free use of an in-house gym and a trainer. Of course, one, it is a free and there is no question of any service, and therefore there should not be any liability for payment of tax. Also, it's more of a facility which is provided to the employees. The fourth was optional pickup and drop facility, and there were two views on this. Divane said that this is in relation to employment, and therefore there is no liability for payment of service tax. However, Parwane was of the view that, Parwane had a divided view. They said that it could be either not taxable, but they said this, it could be part of the CTC, and therefore it's part and parcel of the employment, and therefore not taxable. Now, what my submission over here will be a little different. Treating this as part of CTC will be a little bit of a stretch, because what you really are doing in a CTC calculation is, whenever you have an employee, you offer that employee an option to either get full salary or to get something in return. To say that, okay, you have a possibility of getting a salary of 10 lakh rupees a year, but instead of that, do you want a house, do you want a car, in which case your cash component goes down and the facilities which you get go up. And whether these are then therefore really in the nature of services or not. Now, what I feel here is that when it is part of CTC, you could treat it as a transaction to say that this is in the course of employment, and therefore there is no real recovery which is made by the employer from the employee, and therefore there should not be a liability for payment of tax. On the other hand, if this was not really forming part of your CTC computation, but say you are anyway offering at a particular grade, say 5 lakh rupees salary every year, and then you make an offer that do you want this particular facility, which is an additional facility, for which we will deduct 1,500 rupees without going into your CTC calculation, I feel the risk of a taxable service coming into existence is a little higher over there, with the treatment being that this was a separate offer made by the employer to the employee, which was accepted, and the employer is then providing these services to the employee, for which there should be a liability for payment of tax. So again, sometimes this will play on the way it is structured, the way the offer is made. Was it a separate offer? Was it a part of the CTC structuring? And that may really change. Again, documentation plays a key to this. The serial number 5 was reimbursement of actual expenses incurred for meals and travel after hours in the course of employment. Clearly, to my mind, this is in the course of employment. There is no question of any liability for payment of service tax on this, because these are actually services availed by the employee when he is traveling, availed on behalf in a way of the employer, and there could not be any liability. The next part of this question goes on to say that there are certain recoveries which have been made from the employees. One example or one case over here has been that the company follows a procedure of paying advance bonus every year. They pay the bonus for the whole year in at the time of Diwali, in anticipation that the employee will be there with them till up to March. And if the employee leaves before March, pro rata bonus is recovered. What will happen to this recovery? Will this be treated as a reduction in salary, or will it be treated as a consideration for allowing him to leave the employment and therefore liable for service tax as a separate transaction? Here, to my mind, when an advance bonus is given, it is with the understanding that you will have to refund this if you are not in employment. It is effectively a reduction in the salary. You are just recouping your salary which has been paid in advance, and therefore there will not be a liability for payment of service tax on this. But what will happen to notice pay which is recovered from employees when someone is not serving the notice period, which is the next case? Now this is becoming a little bit of a issue.
Notice pay coupled with advance bonus.
No, that is separate. Advance bonus is separate.
Okay.
Notice pay by itself. The peculiar situation is arising on account of 66EE, which says agreeing to an obligation to refrain from an act, to tolerate an act or a situation, or to do an act, and whether this will get covered over here or not. And there are some companies which have already started recovering service tax from the employees if they are leaving early, in addition to the notice pay, and they are depositing these taxes. whether this will be liable for payment of service tax or not. Diwane was of the view that it is a recomputation of salary, and therefore there should not be a service tax. There were alternative views also within the group. One part of the team said that this was agreeing to an obligation, and therefore it could be liable, or this could be in the nature of liquidated damages, on which they felt on liquidated damages there should not be a liability for payment of service tax. Parwane was of the view that that there is no agreement, and therefore it does not fall within the purview of agreeing to an obligation, and therefore there should not be a liability for payment of service tax. If effectively to interpret the clause 66EE, whether there should be a separate agreement for such a transaction and such a recovery or not. Now, it is a little tricky. I also very honestly do not have a final view on this, but I would err on the side to say that such a transaction should not be liable for service tax, because to my mind this is more in the course of employment. It is more of a compensation which is given. However, will you be able to extend this to 66E and then say that it constitutes a separate transaction? And that is where I would just want to spend a minute. We look at the definition of service, and of course that's the most important part after the introduction of the negative list. And then you compare that definition of service and the various clauses, the definition of service, declared services, bundle services, and then you also look at in the declared services this particular clause. Now this particular clause, again, agreeing to an obligation to refrain from an act, to tolerate an act or a situation, or to do an act, by itself can be interpreted in such a wide term to say that I did not need anything else under the service tax law. I do not need the definition of service, because everything is to refrain, tolerate, or do. Then that by itself could have covered the whole gamut of services, the service tax law. Therefore, what is the scope of this particular phrase or this particular clause, 66EE? To my mind, you cannot read this in a very wide sense. You have to read it in a narrow sense. The first indicator to this, to my mind, is it starts with two words which overemphasize the intention. It says agreeing to an obligation. They could have just said agreeing to refrain from an act, but they said agreeing to an obligation. That means there has to be an agreement, and it has to create an obligation. And if that two words, to my mind, overemphasize the fact that this clause will come into play only when you have a separate agreement or a separate contract for certain things to do or not to do some things. So for example, non-compete is the classic example which everybody gives, which has been given in the education guide. Right of way is something which is also an agreeing will get covered over here. There was a recent case in Mumbai where a builder paid an X amount of crores to another builder. So he was building a sea view apartment. There was a plot ahead. The builder was going to build his building. Now if the builder had built, then he couldn't have sold his flats at a higher price because the sea view was getting blocked. He paid that builder a price to say that I will pay you so many crores, you delay your launch of your project by 2 years or by 1 year. Agreeing to an obligation to do an act, which is to delay. Again, only such transactions where you have a specific agreement to do something or not to do something, those should be covered. We cannot really interpret this in such a wide term that everything falls into the pot, because in that case then there is no requirement for a definition of service or a charging provision. Sorry, a service, not a charging provision. Everything will become taxable. So to my mind, this is the way we'll have to interpret that, such a transaction, the provision. And here, there with this particular aspect in mind, I feel a notice pay which is recovered from an employee cannot fall under the 66EE, because there is no specific agreement. Yes, there may be an agreement, but that agreement is more in the context of an employment, in the course of an employment, and therefore it should not fall here and they should not be liable for payment of tax. Literally speaking, if I only read that particular clause, anything and everything fall under that, can fall under that. Now that is of course going to be a challenge, and it's going to lead to substantial litigation. The next is of course going further on a cafeteria which has been set up. Now the group has this was again discussed by Diwane and Parwane, and most of the places the discussion has been that these are all supply of goods, these are all sale of goods, and there is no liability for service tax. However, perhaps I have not been very clear in the questions which I have raised, and let me just explain what the intention of this particular question was. The question was, of course, in relation to providing restaurant or cafeteria services to the employees. And when I had mentioned over here that in an office, the cafeteria, the dining area, furniture, waiters are all provided by the employer or this particular entity, which is the People First Limited. They were going to be, in most cases, the intention was that they will be allowed to be running under the supervision and control of the third party, except in option 1, where we said that he is going to be controlled by People First. So let me take this one by one. In the first option, the question was that a third party contractor will come and he will prepare and supply the food. Thereafter, the facilities are completely under the control and management of the company, which is People First, and this food will be provided free to the employees. Yes, to this extent, both the groups have correctly replied that this is a transaction of sale or supply of food on which there will not be a liability for service. Using this food and the various facilities, the food catering of food is provided to the employees, but it is free and therefore there is no liability for payment of service tax. The second is a situation where all the facilities are there and it is provided by People First, one under its own control, but the third party is charging the employees, again a transaction of sale. However, to bring in a variation on this, if all these facilities, which is also normally seen in the case of a catering contract or a canteen contract, that you provide the facilities but you ask the canteen contractor to run it, in which case where it is the third party contractor will run the cafeteria, he will prepare the food, he will use the various facilities to provide the food to the employees at a concessional rate. That could become a transaction of service, or a transaction of a service as an eating house or some sort of a restaurant on which there will be a liability for payment of service tax. There is this new exemption which has been introduced in the mega exemption notification entry 19A in respect of factory canteens, in which there is provided an exemption. So you need to examine whether that particular exemption is going to be available or not. The third option was similar to option 2. The only variation in this option is that People First Limited was going to pay a subsidy to the canteen contractor. And here was a discussion which I want to have. Of course, both the groups have provided that there will be a liability for payment of tax on the subsidy. The question is, how do you treat this subsidy? Will you treat the subsidy as part and parcel of the service of the food services which is being provided, or will you treat this subsidy as a separate transaction? Now, whenever you have a subsidy is provided, there could be two kinds of subsidies, and let me elaborate this a little bit. People First Limited wants its employees to receive food at a concessional rate. They say instead of a cost of thali of 100 rupees, you will only charge 40 rupees. People First Limited can go to the third party contractor and can tell him that instead of 100 rupees, you please charge my employees 40 rupees. I will pay you the 60 rupees. One way of doing it. The other way of doing this is that People First Limited will say, you provide this at a 30%, 40%, 50% concessional to my employees. I know you will be running a loss. What should be your loss? It will be say 2 lakh rupees a month. Every month I will pay you 2 lakh rupees. Then I will not go per plate or per dish. And here we also have some decisions of the courts or the Supreme Court on how this should be interpreted. Whenever there is a separate consideration which is provided on a per plate basis, the logical interpretation will be that the per plate consideration is an additional consideration for the same service. That means if the food which is provided by the third party contractor to the employees at 40 rupees is going to be taxable as a restaurant service or as a service in the eating house, the 60 rupees also forms an additional consideration for the same transaction and therefore needs to be added. And therefore that is the way that subsidy will have to be treated as an additional consideration. If you're getting a 40% abatement or a 60% abatement on the supply of the food in the canteen, you'll also get the 60% abatement on the 60 rupees which People First Limited is going to provide you. However, the treatment for a fixed sum or a subsidy is going to be different. The fixed sum or subsidy, to my mind, constitutes a separate transaction. and that is not relatable to any other service, that is a fixed sum which is provided to provide food at a concessional rate, that clearly gets covered under your agreeing to an obligation to do an act. Agreeing to an obligation to sell to your employees at a concessional rate for a consideration of 2 lakh rupees every month. Whether I am selling supplying food to one employee or to 1,000 employees, you will give me 2 lakh rupees every month. And therefore, in this example, if you will see that the question was that People First Limited will be paying a fixed sum or a subsidy per month to the third party contractor, and this particular transaction will then get covered as a separate transaction liable to tax at 12.36%. It does not get clubbed with your canteen services and doesn't get taxed over there. So that's a full applicable rate which needs to be paid. The fourth is a question where the third party contractor will charge People First Limited, and People First Limited will be recovering this money from the employees, irrespective whether they enjoy the food or not at a concessional rate. And many companies have this particular treatment. They recover, for example, 10 rupees per month from the employee's salary, whether you eat or you don't eat. And what would be this transaction? So far as the Diwani group said, this was a pure supply or sale of food, and again Parwane also was of the view it is a supply or sale of food, and the nominal amount which is recovered is in the course of employment. I feel that looking at the nature of the transaction, this should be treated as a separate supply. They should be treated as a separate supply of food on which People First should levy or pay the service tax. Of course, they may be entitled to claim the credit of the taxes paid to the canteen contractor, but however, it will be a separate supply on which there should be a liability for payment of service tax. Going to serial number 3.
At full rate, sir. At abatement.
At full rate, or it may be an abated rate. Yes. Question number 3 was in relation to intermediary services, and essentially the whole idea of asking this question was to say what is an intermediary services and how different and a single activity can change the nature of the transaction. The example which is given over here is that there is a Singapore entity which is by the name Credit PTE, which is a Credit Singapore. It has a subsidiary in India, separate legal entity, Credit India. Credit India provides assistance to Credit Singapore in 2 ways. Sometimes Credit Singapore is engaged in the business of providing loans and advances. So many times Credit Singapore has certain customers in Singapore. They will tell Credit India that I have this customer, can you go and help me with some activities such as documentation, risk assessment, such services. So the employees of Credit India will go to the company which is requiring a loan. All the customers are identified, or the prospective customers are identified by Credit Singapore. They will do the discussions, they will provide the information, they will do the credit assessment, the documentation, and send it back to Credit Singapore. The other alternative is that Credit Singapore also tells Credit India, please also scout for new customers in India for me. And for new customers, obviously Credit India will go, they will look in the market, they will identify customer, they will go and market the services of Credit Singapore, and if the customer is interested, again go through the same, send a proposal, give a proposal to them, discuss with them, do the credit assessment, the documentation, and then the loan is provided by Credit Singapore. And the question is whether in these 2 transactions, where would both these different kinds of services fall? Will any one of these or both of these fall under the definition of intermediary services? Now intermediary services is a little badly defined, and I'll just read this out for the sake of everyone. It's there in the paperwork. Intermediary means a broker or an agent or any other person, by whatever name called, who arranges or facilitates a provision of a service, hereinafter called the main service, between 2 or more persons, but does not include a person who provides the main service on his own account. So here is a person who arranges or facilitates the provision of service, which is the main service. In this case, our example, the main service is giving a loan by Singapore, but does not include a person who provides the main service himself. So he should not provide the main service himself. Now, the way this is worded, you have to facilitate the provision of service. To my mind, in the first case, in the first scenario, where the customer is identified by Singapore, Singapore is telling India that you please go and undertake a credit risk assessment, complete the documentation, and I will disburse the loan. I will of course take the decision on whether the loan is to be granted. To my mind, here the services of Credit India is actually to provide some sort of a back office or a support function, and therefore this should not fall under the definition of intermediary. But the second kind of a service, where he also scouts for employees, identifies, sells, or convinces the customer that he needs the service, and thereafter sends a proposal, then gets into a credit risk assessment and other support function, that should be a transaction which will fall under the intermediary services, and therefore will be hit by Rule 9, and therefore to become taxable at the location of the service provider. And there could be a lot of such instances which get taxed because or which get taxed because of intermediary services. So there are certain examples which I can give you which should not be intermediary services, and one is of course call centers. A call center can respond to a call from an Indian client on behalf of a foreign entity. And that of course that question may be, or a query may be for a bank, for example, for a service which they want. But he is only responding and providing a service which is a distinct service from the service provided by the bank, which is a call center service. Service provided by the bank may be a banking service or a credit card service, and therefore to that extent, to my mind, will not be an intermediary. Similarly, in construction, subcontractors are not intermediaries because they are providing the main service itself, and in the definition it is said, it does not include a person who provides the main service on his own account. So when something is subcontracted, it goes out because he is providing a main service. He is supplementing the main contractor. Similarly, recovery agents, and the education guide says recovery agents are intermediaries. I feel they are clearly not, because what is a recovery agent doing? You have given a loan to somebody, then I engage somebody to go and recover that loan. He is not supplementing my efforts. All he is doing is a separate transaction. It's as if I am engaging a lawyer to send a notice. Will the lawyer become an intermediary? Clearly answer is no. He is going to follow up. He is going to convince, cajole, pressurize or threaten to pay the loan. But to my mind, such a recovery agent does not become an intermediary. He continues to provide an independent service and should not be an intermediary. The education guides also talks about tour operator. Again, to my mind, a tour operator cannot be an intermediary because I am not interested in availing the services of an airline or a hotel. I am interested in touring a particular destination for which I require an airline, a transportation or a hotel, and therefore a tour operator to my mind should not be treated as an intermediary. On the other hand, intermediaries like marketing agents are at a risk of being treated as intermediaries, and the issue is huge in the case of financial services sector, where there are a lot of challenges for all these external commercial borrowings, where the Indian arm always will market the external commercial borrowing. The disbursement is done by the foreign head office or the branch, and therefore all of this unfortunately are getting covered under intermediary. Representational offices again is a risk. Booking agents will become intermediaries, hotels or airlines, including websites. When you book through a website, then how do you treat the website which is effectively booking, and they are in a way facilitating the provision of a service between a customer and a service provider. Recharge coupons for airtime, again the distributor is effectively an intermediary because the distributor is not really providing the service, he is only facilitating. He buys the airtime, he sells the coupon, and to my mind he should be treated, or he would be treated as an intermediary. I think one of the reasons is that they have also included that in the mega exemption notification, where these distributors are exempt from payment of service tax. So this was the background of query number 3 on the distinction between intermediaries and others. No, market research is not an intermediary because he is doing some research and providing a report. Then he is not facilitating or arranging. Yeah.
Reinsurance broker?
No, a reinsurance is a principal to principal transaction. It's not. Sorry, a reinsurance broker may be. I'm sorry, I missed the word broker. A reinsurance broker may be, and I think there is already a challenge on that along with ECBs, with a reinsurance broker being in India and the reinsurance taking place outside India. It's unfortunately getting taxed. I'll quickly go on to question number 4, and I'll give you the background of this question number 4. Can we just have the queries later on, please? Question number 4 is for a gold deposit scheme, and this is becoming very relevant today with the current account deficit we are having. So RBI notified a gold deposit scheme, and the scheme was something like this. They said that if you have gold, then you can deposit this with the bank and you can get interest on this. So say you have 2 kilos of gold, and let's take an example of gold bars. This is also possible for with jewelry. In say you have 2 kilos of gold, you can go to a nominated bank, you can deposit your 2 kilos of physical gold over there and you will get a gold deposit certificate. This gold bears an interest, say for example interest at 10%, just for the sake of simplicity. And if you have deposited this for a period of 1 year, then you will get interest for 1 year at the rate of 10%. Now how is this interest calculated? Interest is also calculated in weight. Therefore, on 2000 grams, at the rate of 10%, your interest is going to be 200 grams. So at the end of 1 year, when the interest is due to you, you get interest of 200 grams. The rate of gold on the date after 1 year is converted into rupees. Say it is whatever 3000 rupees a gram. Then they will convert that into rupees and they will pay you that much, 6 lakh rupees as the interest in cash. The question which has arisen is when this gold is deposited and the interest is received, how should you treat this under the service tax law? Will there be liability for service tax or will it not be liable? I'll give you a slightly different example which also I want you to bear in mind when we discuss this particular point. It happens even in business and commerce today. Go to Taloja, there is a line of chemical factories and all these are manufacturing facilities. All these are known to each other. They are there in that area since many years. They always have an informal understanding. Say one factory has a shortage of a raw material. He is ordered it from somebody. It's going to come after 10 days. He will go to his neighbor and say, I want this raw material, 10 tons, can you give it to me? When my raw material comes, I'll replenish it. So his neighbor will give him the 10 tons, he'll use it in manufacture, sell the manufactured product. When he gets his supply, he will return the 10 tons of raw materials. This is also done. This gold deposit scheme in a way is the same, where when I have deposit with the bank will, I get the interest, the bank will have my 2 kilos of gold. What will the bank do with it? They will go and sell the gold in the market to a jeweler. After 2 years or after 1 year, I can go with my certificate and get my 2 kilos back. At that time, he will pick up any 2 kilos which is there in his stock. The bank may have bought it in the market, and they will also structure it in such a way that they can also sell at say 30,000 and buy at 29,000 to make a profit at that time, and he will give me my 2 kilos back. So the question is, this interest, what does it constitute or what does it represent? Should it be liable? Is it for a service? And if it is for a service, is there a liability for payment of service tax? Now, this was again discussed by Divane and Parwane. Divane, so far as the interest is concerned, Divane have said that it is a deposit. It is covered within the definition of interest, and therefore it's not liable. Under the negative list, we have an exemption which is granted to any deposits, loans or advances where the consideration is represented by interest or discount, and therefore they have said it is interest. And Parwane has also discussed the meaning of actionable claim. They felt that this is not covered in the definition of actionable claim, but it is a deposit, and they have said it is then covered because it is in the nature of interest. Friends, there is one more angle which we also need to consider. First, go to the definition of service, then look at whether it is an actionable claim. An actionable claim is defined, of course, it is a definition which is very honestly only for lawyers. Chartered accountants find it difficult to understand. I really don't understand. Every time I read it, I come up with a different answer. So I'll still read out. If you can. See, but not ours, others. You have to only say whether interest is taxable. So actionable claim means a claim to any debt other than a debt secured by mortgage of immovable property or by hypothecation or pledge of movable property. So far it's not covered because it's not a debt. Or to any beneficial interest in movable property not in possession, either actual or constructive of the claimant, which the civil courts recognize as affording grounds for relief, whether such debt or beneficial interest is existent, accruing, conditional or contingent. So I think Sridharan sir and Sahu sir can perhaps throw better light on this, but the way I read it, that to my mind such a deposit should not be an actionable claim, because here it also talks about the only place or only phrase under which it can fall is whether it is a beneficial interest in movable property, not in possession. And beneficial interest, the way it is explained in the Black's Law Dictionary, also it is also covered somewhere in the education guide. They are saying it is a right or expectancy in a thing. That means a beneficial interest, the way it has been read, is to say the benefit arising from the gold is what I am entitled to, not the gold itself. So the interest is not in the gold, but interest is in the benefit arising from that gold. Now certainly here, when I deposit and I have a gold deposit certificate, it's not only the interest I am entitled to, but the gold deposit certificate effectively represents the gold itself. So I felt this may not really get covered under the definition of actionable claim. The second question was thereafter, when you go further in the definition of services, can I say that when I am giving 2 kilos of gold, I will get my 2 kilos of gold back? This will be lease of the gold, transfer of the right to use gold, because for 1 year I am allowing the bank to sell the gold, then he will replenish by buying something in the market and return 2 kilos. Of course, it will not be the same brick, it will be some other brick. If you give jewellery, they will melt it and they will give you bricks of that much weight back. So again, it's not going to be the same gold which you give. Now the concept of transfer of the right, I felt, is not covered here, because transfer of the right presupposes that I am giving right to use a particular asset which is used and returned to me. Here is not a situation where I am envisaging the return of the same gold which I am giving after use. It may be any other gold, is more of a replenishment. So I interpreted to say that this does not get excluded from the definition of service. It is a transaction of service. Let me go back to my example of the chemical factory. You go to your neighbor, tell him, can you give me 10 tons of this raw material? I will pay you 10,000 rupees per ton. When my raw material comes, which is worth say 2 crores, I'll pay you this back, but for 10 tons I'll pay you lakh of rupees. Will you say this is liable for service tax or not? To my mind, clearly that's a service on which you will pay service tax. So here I am again going, unfortunately, towards a interpretation to say that this is a service and the interest then represents a consideration for giving the gold, which is not an actionable claim, not a transfer of the right, and therefore may become taxable. The only other aspect which I need to go and consider is, can I go under negative list to say any deposit loans or advances where the consideration is represented by interest or discount? When I am depositing the gold, the word deposit is not defined. Yes, I can clearly take an argument to say that the gold deposit is a deposit. But the consideration for the deposit should be interest. I am getting an interest. Then there is a definition of interest in our law. And just to quickly read this definition, is there in the paper book. It says, interest payable in any manner in respect of any monies borrowed or debt incurred, including a deposit, claim or other similar right or obligation, but does not include any service fee or any other charge in respect of monies borrowed. So that second limb we need not really worry. It says interest payable in any manner in respect of any monies borrowed or debt incurred, into bracket, including a deposit, claim or other similar right or obligation. Clearly it is not money borrowed or debt incurred. Debt incurred here is in the context of money, is in the context of cash, rokda. Now the clause, the bracketed words, including a deposit, claim or some similar right or obligation. This is, it qualifies the word similar right or obligation, it qualifies the whole preceding words, and therefore the deposit or the claim should be in the form of money. It cannot be in the form of commodities. And therefore here my interpretation to this is that it also, this interest which I am going to get, though it's going to be in cash, it is not for the use of money, it is for the use of commodities, which is gold, and therefore this interest will get covered under the definition, will not be eligible for the exemption and may get liable for service tax, will be subjected to service tax. This was a view which is a little different than the groups have expressed. I tried to find a way out, but I feel that this is a little difficult, because when the service tax law was drafted, I don't think anyone envisaged lending of commodities for use and the return and a consideration paid for that should be liable or subject to service tax. So here I feel that there will be an exposure. Yes sir, Sridharan sir has a thought.
Money definition doesn't include investment gold. How can I get the money?
transaction in money.
Hey, money itself doesn't.
Yeah. No, no. Money is illegal tender, and it talks about checks, DDs, and all.
All countries in the world include investment gold as money.
We have not.
That's where the problem is.
Yeah, we have not.
What about debt? Can it be debt of commodities?
Sir, yeah, the debt. I'll just go back to the definition. The way it is worded, it says debt incurred. So that the word money is borrowed read with debt incurred talks of, gives a color of money or a monetary transaction. Now the problem is the finance minister wants to control the current account deficit. He is encouraging the banks to go and get gold deposits. That these transactions are not happening because who's going to pay the service tax of 12% on the interest you get? So that's becoming a challenge. The next was, of course, there was a penalty element here. That if you go to the bank and say I want to withdraw after say 6 months instead of 1 year, then you would be liable for penalty. And it was felt by, this was only discussed by Divani, it was felt that this was a recomputation of the interest. The way this penalty is normally levied, that is a reduction or a lower rate of interest, and therefore there should not be any different treatment. Whatever is the treatment given to the interest, you will have to pay the service tax. If the interest is reduced, your service tax liability to my mind will be reduced. Next is space solutions. I'll quickly go through the space solutions responses. So far as the security deposit is concerned, it's a security deposit not for any services but as a deposit, therefore it's not liable. To the extent of the outstanding rentals are concerned, you would have already paid your service tax when you raise the invoices on the basis of the POTR. And therefore, whenever you adjust this, there is not going to be a liability for payment of service tax because you already discharged the payment of service tax. Of course, if this is to be adjusted against future rentals, then of course, as and when these directions or instructions are given by the customer to adjust this against future rentals, you become liable to pay the service tax. Then is the late payment fee. The late payment fee, to my mind, is an additional consideration for this service. Both the groups, Divani and Parwani, have discussed this, and they felt that while there is an additional consideration, it will be in the nature of interest because it is, while there could be an additional consideration, they also felt on the other side that this could be in the nature of interest and excluded from the valuation rules under Rule 624, which says any interest for delayed payment of the consideration. Now, here, to my mind, if the late payment is computed as a function of the amount of delay, say that in percentage forms, for example, for every day of delay or something of that sort, you could perhaps take a stand that this is in the nature of interest. However, if the late payment fee is a fixed fee that you pay say 500 rupees or 5,000 rupees, whether there is a 1 day delay or a 1 month delay or a 2 months delay, to my mind that should be treated more as an additional consideration for the service that would not be in the nature of an interest and therefore should be liable for payment of service tax. The third was a buyout charge. The situation here was that when I have a taunt customer who keeps on defaulting every time, then I will be entitled to terminate my transaction. But and usually this condition will be there in my contract to say that if you are regularly a regular defaulter, I will first take your refundable deposit, I will adjust it against outstanding rent, and the balance I will not refund to you, I will forfeit it. And therefore what happens to this forfeiture? Group Diwanis felt that this is taxable by saying that this is agreeing to an obligation to tolerate an act. However, they also said, there was also another view which says that it's a forfeiture but still not liable. Parwani also had a similar view where there was two views granted, that either it's agreeing to an obligation to tolerate an act or there is no agreement and therefore there will not be a liability for payment of tax. Now to my mind, this is a part of your agreement to say that if you're let me clarify that better. If it is a part of your agreement to say that if there is a regular default, we will not only utilize your refundable deposit to against your outstanding rent, the balance we will not refund to you. I feel this is a part of the service and has to be added as an additional consideration for the service which is being rendered, and therefore that should be taxable along with the rentals. Serial number 4 is other income. I've got a deposit of someone lying, he doesn't come to claim it, I try and send him a reminder, he doesn't bother. After 3 years, which is the limitation period, I write it back in my books of accounts. Clearly not for services, is only an other income and therefore not liable for tax. Serial number 4 is, some of my customers are brilliant, they don't bother to collect their old files, they don't bother to collect little bit of their furniture or their old assets or old used computer, they just leave and they expect me to dispose it off. I keep it for 3 years, after 3 years I just dispose it off, whatever money I get I adjust it against my outstanding if any, and whatever excess is there I straight away donate it off. Now if the intention is that I sell it off to the extent of the disposal of the assets or any material which is left behind, it's a transaction of sale. The consideration which is received, if it is intended to be to the extent which is adjusted against outstandings, there is no problem because you've already paid your service tax as and when you raise your invoice on your customers. On the excess or on the balance, so when you donate it, to my mind, that should not be treated as a receipt of this particular entity, which is the Space Solutions, because your intention is to donate it off. Of course, you need to back it up with your appropriate books entries in your books of accounts. What then you need to do is credit it to your customer and then directly donate it and issue a check and debit that particular customer. If in your books of accounts you're going to register that as your income or your receipt and then show it as a corresponding donation, then you'll have a challenge to it. So whatever you're intending to do, you need to back it up by an appropriate entry in your books of accounts. This is not contractually retained. This is an extra recovery, technically required to be paid off to your customer, but you're donating it off, and therefore to my mind you can safely take a stand that this is not going to be liable for payment of service tax. The next is on retention. Case study 6. It's a simple issue. I'm executing a contract. I have a retention clause which says that 10% of the contract value will be paid after 2 years. I raise an invoice which says value of the work done in this month 1 lakh rupees, less retention 10%, 10,000 rupees, balance payable 90,000 rupees, or a running account bill which says 90,000 rupees. I don't charge service tax on this. I'm simply going and paying tax as of now on 1 lakh rupees as of today, but I raise a debit note on my customer for the tax on 1 lakh rupees as a separate recovery and do not include it in my invoice. How should I really treat retention? The moot question is that one way, or there are multiple answers which came from Divane and Mastane on this. Divane felt that you have not raised an invoice, you are going to raise an additional debit note or document for recovery at the end of 1 year or 2 years, whatever your retention period may be, and therefore your POTR will take place at that point in time when you raise the debit note. Similarly, the payment is also not done for this retention amount, and therefore again it's not taxable today. You have to only pay tax when you receive this money. There was another thought which went to say that all the activities are completed and therefore it becomes taxable today. You don't have to wait for the retention money to come in. Mastane was of the similar view. In fact, they had a stronger view to say that it is an amount which is retained to ensure the quality of the work done, and so far as the service is concerned, it is completed today and it should be immediately taxable. Therefore, they were of that view that there has to be a paid tax as of today only. The only question which Mastane raised was that if I pay tax today and then I raise a debit note for recovery of this tax from my customer, or the retention money from my customer and along with the tax after 2 years, then how do I adjust it in my returns? Now, my view, of course there are conflicting views, but my view of this particular issue is that a retention is only more in the nature of a deferred payment to give to assure the customer of the quality of the work done and to assure him that if there is any warranty claims, I will take care of it. It is more retaining your consideration. So far as the service is concerned, the main service, it is already complete in all respects, and therefore is more in the nature of a security for my customer, and therefore tax should be immediately payable on this when I am raising the invoice, irrespective whether I receive the money or not. You may have an agreement with your customer that 10% I will raise by a debit note, or I will not raise any document, whatever it may be. You may also have an agreement with your customer that I will charge you 90% for the contract price, but 10% I'll levy tax or recover tax of the 100%. Or you may agree with him that also tax I'll recover after 2 years, but that is not going to change any aspect. So far as the transaction is concerned, this transaction is completed, you need to discharge the liability for payment of service tax today. When you receive the money, whether it's a retention amount or the tax also in the retention amount after 1 year or after 2 years, that needs to be directly appropriate to an outstanding amount. There is not going to be any liability for payment of tax at that point in time. So my view is that it needs to be discharged as of now, because the work is when the work is completed without any delay. The next is liquidated damages. So liquidated damages, again more in the context of 66EE. Again, just to repeat, agreeing to an obligation to refrain from an act, to tolerate an act or a situation, or to do an act. Whether this liquidated damages for delay in completing any work will fall under this particular clause. As I mentioned, this clause will only cover a situation where there is an explicit transaction or an agreement, effectively to say that it constitutes a separate transaction altogether. Now, will liquidated damages, a clause for liquidated damages in a contract, constitute a separate transaction? I am of the view that such a clause does not constitute a separate transaction in itself. It is not an obligation which I am forced to allow him to delay the work. In fact, I am most interested in getting my work done on time. It is because of certain situations beyond my control that my service provider has delayed, and therefore I provide for a penalty on him. Now, therefore, this does not get covered under 66EE. Then the next question which comes up is this particular liquidated damages. Should I treat it as a reduction in my consideration, or I say it's more in the nature of a recovery on which I don't have to pay service tax at all? No liability for payment of service tax, or no penalty, no reduction in the consideration. Well, that is where it gets a little tricky. Again, there is no real logic to this, but I feel that a more appropriate interpretation should be that a liquidated damages is more in the nature of a penalty. So far as the service is concerned, when I am charging 100 for a service, although the liquidated damages is say 2 rupees, my service will be for 100 rupees, on which I should pay a liability for, I should pay service tax of 100 on 100. On the 2, there should not be any treatment under the service tax provisions to be given. It should not be treated as a reduction in my consideration. Of course, then the counter argument goes, which is the next example, and I'll come back to the liquidated damages in a minute, on bonuses. What happens when my agreement says that if you complete my work within a shorter period of time, I will give you an additional bonus or early completion bonus? To my mind, yes, an early completion bonus is in relation to a service, where I am obligated, or the service recipient is obligated to pay an additional consideration, and therefore clearly will have to be added to the consideration and tax, which is both Diwani and Mastane say that they have to pay tax. But then why should this treatment not be given to liquidated damages for reduction in the consideration? Well, the only distinction between a bonus and a liquidated damages is bonus or an early completion is something which is desired by both the parties. They desire that they go towards a common goal of completing the work on time or as early as possible, so it benefits both. And therefore, in a way, there is an agreement to enhance the value of the service in the case of an early completion. But when it comes to a liquidated damages, it is more penal in nature. It is more penal in nature for an undesirable situation. And therefore, looking at a situation that is more undesirable in nature, I was of the view that liquidated damages not only it's not a separate transaction clearly, but has to be kept out of the purview of service tax and should not go to reduce the value of the service and the value of the consideration for the services, and therefore the tax payable on the service should be at the full contract value and not excluding the liquidated damages. This is my personal view. May not be a very clear reasoning which I'm able to give you, but this is more of a nebulous kind of a interpretation which I'm placing, which I feel, or takes me to a interpretation that you need to leave it out and not really adjust it in your valuation. Would Sridharan sir or Sahu sir want to?
These are some excise larger bench tribunal transaction value to be the net of this.
Net of liquidated damages.
There is no reasoning in that. By Joe, it is by just Ravram.
Okay.
Whether this liquidated damages is an adjustment in price or a penalty will depend on whether the amount is disproportionate to the default. That means what is being compensated. If it is disproportionate, it is penalty.
Yes, so that would be also. So what Sahu sir is saying that you have to determine it from the terms of the contract. Is the liquidated damages disproportionate to the default? For 1 week, if you are charging 2%, which is going to be a huge amount, then it will be more in the nature of a penalty, not a reduction, to prevent a breach of the contract, and therefore then it will not go to reduce. However, if you are wording it in a slightly different way, it can also take the color of a reduction in the consideration, and therefore it can go the other way of reducing your consideration. That will be one way of certainly interpreting that. I'll go to the next case study.
What do you say, sir?
I'm silent.
We are asking you to speak.
I
sir.
don't know.
Going to case study number 8. There is a finance company. There are having 4 or 5 different kinds of transactions. The issue was relating to the taxability of these transactions. The first transaction was a foreign exchange conversion, which is they are in a way buying and selling foreign exchange. Whenever they are converting foreign exchange, they are leaving a conversion fee of 100 rupees. And the question was, would these be liable for payment of tax, and what is the point of taxation? Well, Divane and Parwane have come out with this, have discussed this, and there is an interpretation which Divane at least gave, is that on both, in fact, Divane and Parwane, they both felt that foreign exchange are goods and they are not money, and therefore why should there ever be a provision for levy of service tax on conversion of foreign exchange? Yes, if you look at the definition of money, it says money means legal tender, including any other payment by any other means like check, DD and all those. Now whether that legal tender will include foreign exchange or not, Girish pointed out some case laws which also mentioned some foreign courts which also mentioned that foreign exchange are goods, though there was a conflicting decision also on that, and therefore foreign exchange will not be in the nature of money. In the Indian context, legal tender has to be legal tender in India. So certainly that would be an argument which is which needs to be considered. However, looking at the way this particular law is drafted, looking at the way the tax is being discharged by everyone as of so far, and the practice followed, I will say, I would not want to really venture into an argument as of now, unless I want to take an extremely aggressive view, to say that this is not liable for tax at all. So I will, for the sake of this particular discussion, go on the presumption that foreign exchange or conversion of foreign exchange is a transaction of service, and then let us take these couple of examples in this particular case study. So here is a situation where you are going to convert the foreign exchange and you are levying a conversion fee of 100 rupees, whether this is going to be liable for service tax or not. To my mind, in the case where a conversion of, this is more to do in the context of the definition of service, and we can quickly run to that definition. There is explanation 2, which says, now the definition of service says, it excludes or it does not include a transaction in money or actionable claim. So transaction in money is excluded. Then explanation 2 says, transaction and money shall not include. That means it's not money and therefore becomes taxable. Transaction in money shall not include any activity relating to the use of money or its conversion by cash or by any other mode from one form, currency or denomination to another form, currency or denomination for which a separate consideration is charged. That means where there is a change in one currency to another currency or one denomination to another denomination, For a separate consideration, it shall not be a transaction in money. Because if this explanation was not provided, then you'll have a challenge that when I give you a loan, how do you treat that loan? Well, that also becomes a service. Or when you give me 100 rupees and I give you 10 rupee notes, then also that would have become a service. So they said, so long as you're exchanging money, there is no problem, unless you charge a fee for that. So here also, they not only said form currency, they also form currency and denomination, all. So it also includes, to my mind, currency. And here, my interpretation is that tax should be payable or leviable only when there is a consideration which is charged for the currency. So if you go to a bank, and typically many banks today are levying a currency conversion fee of 100 rupees. When you go to a bank, you need to then treat it as a conversion of money, and that becomes a service, not a transaction in money, and therefore you need to pay service tax thereon. Therefore, in my first case study, to my mind, there will be a liability for payment of service tax. That service tax, you can go under the composition scheme and pay tax under that composition scheme at those slab rates under 6(7)(c) and be done with it. And be done with it. The second transaction is the mirror image of the first one, where the only difference being that there is no separate consideration. Now, this second transaction is really the transaction which takes place in the real world. So, in the real world, there is no one who is going to really sit and do a conversion between two parties. What do banks do? They will buy $1 million, they'll have $1 million. If you want, they'll sell it to you. So all of these transactions are in a way proprietary transactions of the banks, where banks will have its foreign currency, and then when someone wants, they'll sell the foreign currency, they'll make the spread, the difference between the buy price and the sale price or whatever it may be. So to my mind, this transaction, where in a way are more proprietary transactions where they go and buy and sell on their own account, which is always the case, any money changer or any bank will always do that, where no consideration is charged, should clearly be a transaction in money and should fall outside the purview of the service tax net. I do understand though that there are some players in the market who don't charge a fee, still they are levying the service tax. So though I have not been really able to ascertain the exact reason why they are levying service tax, although they do not levy that 100 rupee charge.
First National City Bank, ECJ gets.
Sorry sir?
First National City Bank. European Court of Justice dealing with this very question.
Okay.
Spread has to be taxed.
They have said the spread, and that is also what in a way our rule 2B has said, that you need to tax the spread. But sir, when there is no charge, then can I say it's going out of my service, not even a question of valuation?
There is no separate charge.
There is no separate charge.
It's built into it.
Because the nature of, in a foreign exchange, the nature of the transaction is such that I always play on the spread.
Now that's what they are taxing.
And they are taxing. So to my mind, it's more of a trading.
It need not be an individual transaction over a period of time. Both, because some there will be a profit, some
there will be a loss. Yes.
Who will reverse that over? Then the ECS net over a period of time.
It's not even transaction over a period. Anyway, transaction is very difficult to ascertain. So it's not going to be possible. Then the other alternative will be that you treat it as trading in goods and not levy tax. So sir is saying you apply the concept of the trading in good, which is the buy price and the sale price. Yeah.
Exchange of goods, I think.
Trading in goods.
The European Court ruling can also apply to trading.
Yeah.
Be treated as service.
Trading of goods is also service there. No? There they don't have the exclusion.
GST.
Because of the GST, yes. The third issue is about trading and securities.
To that problem. What you are pointing out is a perfect answer.
The third question is relating to trading and securities. This is more in the nature of stockbroking services. Stockbroking services, now the definition of goods includes securities, therefore it includes shares, and therefore these no longer fall under intermediary services. Earlier you might recollect the stockbroking services were performance based and therefore they were always taxable. Now they go under rule 3, and since your customer, which is a foreign institutional investor, is outside India, the stockbroking services, the place of performance will be the location of the FII outside India. However, how this particular business really works is that when an FII wants to invest in India, they need to have a custodian. the custodian is a person who keeps the custody of the money funds of the FII as also the shares. Therefore, the orders may be placed by the FII. However, the payment to the stockbroker will be made by the custodian, and the custodian will also hand over the shares to the broker will hand over the shares to the custodian, who will retain the shares with himself on behalf of the FII. And therefore, in this situation, we are coming to a situation where, although the place of performance of the services are outside India, the consideration is received from the custodian in India, and therefore this is becoming a exempt service and not an export of service in the absence of consideration in foreign currency. There was one particular question which arose, that can you not treat it as an export by saying that at some point in time there was a conversion which had taken place, essentially to say that the FII may have remitted the money in foreign exchange to the custodian, and the custodian is paying the Indian rupees, but there was at least some foreign exchange which came into the country, and therefore can you not say that I have received convertible foreign exchange? Well, practically that is a difficult argument to take, because one, you are not able to trace the source of funds. Funds are fungible. The source of funds, when it would come and what was the source. It's quite possible the money or the funds lying with the custodians may be out of the profits made on the sale of some securities which were held by him earlier, and therefore he's paying out of those funds. So in practically you will end up paying tax, you will end up treating this as an exempt service and therefore lose the benefit of export of service. Serial number 4 was subscription to government securities, and therefore what should be the nature of the transaction. Well, both the groups said that these are investment activities. This was again discussed by Diwani and Parwane, and they are saying they should not be liable for tax. I would like to give a slightly different view. To my mind, when any entity, these are essentially called primary dealers, who subscribe or who participate in an auction of government securities, I will say that these are really advancing loans or giving loans or advances where the consideration is received in interest. Because what is a government security? We also have a Government Securities Act of 2006, and it says government securities means a security created or issued by the government for the purpose of raising a public loan or for any other purpose. So the treasury bills or the G-Secs which we talk really are actually government, these are actually in the nature of loans advanced to the government. Now, so the question which will arise is that if we are saying goods includes securities, then how come I am saying that there is a liability for payment of tax when I subscribe to a government security? And that is where I want to highlight an interpretation, that when I give a loan to the government for which I get a government security, that is advancing a loan. But the security which I have now got, or the document which I have got, is tradable, and when I trade with it on the exchange, it becomes trading in goods. Therefore, creation of the security is advancing a loan, but trading in that security is a transaction of trading in goods. And therefore, the answer to serial number 4 will be, it's in the nature of transaction of loan. Serial number 5 is a trading in goods, and therefore not a service. Just the case of a debenture. If I go and subscribe to a debenture issue, I am giving loan to an entity. If I buy the debenture in the market, it becomes trading in goods, because when I applied for the debenture, there was no security. The security got created when I advanced the loan, and then there was a trading in that security which got created. So the first transaction of subscription is not in the nature of an investment. It becomes in the nature of a loan, and therefore it will have impact so far as your on your treatment of the services, or if your NBFC will to the extent of your send-back credit. Trading in government securities is a transaction of trading in goods, and therefore the implications will be as explained. Serial number 9. We have about 40 more minutes. So we're going very fast, or I'm not sure whether I'm so clear.
You're perfect. Your content is perfect, sir. Perfect.
Thank you, sir.
Good skill and good mastery on the subject.
So, I'm not sure about how much confusion I'm creating. So the risk is on that side. Risk is not for me. The next is serial number 9. Serial number 9, there are different aspects to this transaction. One is that Hackers Limited is selling packaged or customized software. I am jumbling those issues in a way. Some of these softwares are supplied on media, some of these are supplied electronically, and what is the liability when this package software is supplied? We have the decision of the Supreme Court in the case of Tata Consultancy Services, where the Supreme Court has said that package softwares are goods, and therefore sale of package software will be in the nature of transaction or transfer of title in goods, and therefore not liable for payment of service tax. The question arises that what will happen if you are allowing download of the softwares in electronic form. I am selling a software, but instead of giving on a CD or a media, I am just giving him a password to download it. Will it continue to be goods, or will it become service? The education guide says it becomes a service, you have to pay tax. Of course, they are coming from somewhere from the background that under the customs law, when software is downloaded electronically, it is not goods, and therefore you need not pay custom duty. Therefore, they are saying you should pay service tax. To my mind, even when software is downloaded electronically, they continue to be goods. The media or the medium through which any asset or anything is supplied to you will not alter the nature of the transaction, and therefore this should constitute transactions in goods only, not liable for payment of service tax. Of course, the department will take a contrary view. Sorry, I might not. There is an advance ruling on this, that it is a service. It's a service. Okay.
Microsoft?
Recently? Okay. My apologies. I have missed that here. But the logic is that will the medium of any transaction, or will the medium change the nature of the transaction? What happens in the software, in the case of a software which I get on a CD? Again, when I'm getting on a CD, I will load on my computer. To the extent of the CD or the copy on my computer, I am a owner. I can do whatever I want with it, of course subject to my license agreement. Same way, instead of a CD I downloaded through the internet, I'm still entitled to do it, the same amount of things, I can still treat it to be an owner. And therefore, to my mind, that so the licensed copy is concerned, it is a transaction of sale only and should not be a service. The second aspect is that there are certain transactions where there is software development to be undertaken, and when this software development is to be undertaken, these are there are certain base softwares which are required to be used. So there could be a base software, and for this base software, this may be first supplied by the customer, or it may be supplied by hackers, and these are the two situations we are talking about. So the customer may supply a base software, and Hacker India United Limited will develop a software around it. That is one situation. Or you may have a situation where hacker himself supplies the base software and you do some development around it. Now, what will be the nature of the transaction here, and how you need to treat this from the nature of the transaction and also from the point of taxation and the valuation. Friends, before I just come into this, let me just also give you a background of this is a very common kind of a transaction in for many kinds of software. But you need to distinguish this between the two. There are certain softwares which require limited customization. Let me take a huge software like SAP, or like the Oracle software on banking, I think Finacle or something which they call it. Finacle is an Infosys system, but whatever. These are standard software. They are like huge, they are massive softwares, and then you always get given order for buying the software, say for 1 crore, and customization for another 2 crores. The cost of customization usually is more than the price of the software. Now in this software, the customization is really in a way installation, or it is really in a way configuring the software. So in a SAP software, the software has every feature. When you want customization, your service provider does not go and change the software. He'll only on off some switches to say some modules are activated, some modules are deactivated, some reports are drafted by ticking some boxes to say, okay, give these columns, don't give these columns, and they configure your system. Then they also integrate your system by saying that, okay, when you do a invoice, it needs to flow into these databases so that these kinds of reports are given and things like that, or integrate the material management module with your financials accounting module and things like that. So in this case, really, what is really there is that there is a supply of a base software and there is a customization. Such a transaction, typically we treat it as two transactions. One, sale of the base software and the customization or an ancillary activity. Such a, again, supply of the software will be a Rule 3 service, on which, will be a sale. So development of the software customization will be a rule 3 service. The second aspect is that there could be certain development where the base software becomes a small part of the larger software. Say you want to develop in your office a complete office management system, which may cost you say 25 lakh rupees. For that you may buy from the market a SQL software, which is actually the database, and you give it to your developer and he develops the base. But then your software is very small, your final package is very huge. This is a situation where the software is becoming part and parcel of the final software, and this transaction may have to be treated slightly differently than the first one which I gave. So again, the software development, software customization transactions which we are going to look at has to be seen in light of what is the size of the software, what are the activities, what happens to the software, does it lose its identity, and things like that, and then determine what is the nature of the transaction. So this is the two aspects which I wanted to highlight. If I can quickly go through this, questions. Coming to question number 3, the gross amount charged liable to service tax in a contract for software development where the base software is provided by the client. Now, to my mind, that even where the base software is provided by the client, and I'll take this case of a second situation where you are giving a small software and he's developing a big software around it, even then the value of that particular software does not need to be added to the value of the software or the development activities which is required to be undertaken. Of course, recently we have had that Delhi larger bench decision of Bayana Builders, where they have said that the consideration obviously has to be in kind, or it has to be in money, or it can be in kind. But even if it is in a non-monetary consideration, that has to be consideration by itself. So when I supply a software, it's not a consideration I'm getting, it is actually something which I'm giving as a condition of my contract, that I will give you the software and you will develop something around it. And therefore I'm not really passing on the property in this my base software to my service provider or to the software developer. He's supposed to work around it, develop a larger software around it and return it to me, and therefore that is not required to be added. The gross amount charged continues to be the value which is contracted, which is required to be paid for the development of the software. The question is, with the base software, will this answer change if the base software was supplied by Hackers United Limited themselves instead of buying from outside? To my mind, the answer does not change, but you need to, in such a case, carefully look at the wordings of the contract. Your contract should constitute two transactions. One, first a sale of the base software, and then taking that base software and developing a larger software around it. Because many times we find that there are many companies which want to structure these transactions to save taxes. The base software will cost you, will be subjected to VAT at say for example 5%. If they don't get a full credit, they don't want to pay 12.5% on the full software. So they say you first sell the base software, we'll return it to you, you develop a software around it. So then you need to look at the conditions of the contract. It should constitute two separate transactions, and in that case it will fall outside the purview of the VAT law. Now this was discussed by team Mastane, and they felt that there could be multiple options. One is on the whole transaction including the value of the software you pay service tax. Some people in the group felt you pay VAT on the whole transaction, and third was that you pay both the taxes, VAT as well as service tax. I feel that the better way to treat this would be that you ensure that your agreement and your contract is appropriately worded, constituting two separate transactions. Pay VAT on the supply of the base software. To the extent of the development or the customization, you pay service tax, and that should be quite acceptable to the authorities. The next is taxability of services provided to clients located outside India. When the services are provided to customers clients outside India, Group Mastane felt that it should get covered under clause 4A, which is the software which is required to be given to develop, and therefore the place of provision will be outside India. I feel that again that differs. When it's that SAP software, which is a huge software, and I need to really go to the site and then configure, I could also take a stand that these are goods which are required to be provided by the service recipient to do some work on it, and there could be a possibility of taking a argument that this is rule 4A. However, in a base software of the kind we are discussing here, where it forms part and parcel of a larger software, I feel the whole software development is a rule 3 service, it's not a rule 4 service, and therefore you have to apply the rules of the provisions of Rule 3, recipient base, you may be entitled to the benefit of an export. The next is taxability of services provided to clients located outside India, serviced from India as well as on-site. Friends, this is also covered at serial number 12. I will cover this when we come to 12. I'll just park it for the time being. Let's go to serial number 10. Serial number 10, again there's a background to this. The question is in the context of sponsorship services. Sponsorship services are liable under the reverse charge, and therefore what are the transactions which are liable, on which there is a liability for payment of service tax. The intention over here was to generate some element of discussion also for the periods prior to the negative list, where we had a definition of sponsorship which is not there now on the statute. So how do you treat sponsorship? Now, if I may just quickly run through the definition. It's there in the paper book. I will just read out, and I'll just explain. Once I read out, I'll explain the difficulty which is arising. Sponsorship includes naming an event after a sponsor, after the sponsor.
Which page, sir?
I'll just tell you. Is there? I'll give it. Says naming an event after the sponsor, displaying the sponsor's company logo or trading name, giving the sponsor exclusive or priority booking rights, sponsoring prizes or trophies for the competition, but does not include any financial or other support in the form of donations, gifts given, and so we can ignore that for the time being. Only go to the first limb. The question is, look at the first example which I've given. I've gone to Mumbai Cricket Association. I've booked a platinum box or something, whatever you have, that priority or VIP box. I'm getting a priority booking right. Will whatever I've given to Mumbai Cricket Association, will this be a sponsorship transaction of sponsorship or not? Now this is what is happening. Here is a situation where you have not gone and sponsored an event. You have not sponsored a cricket match or a match. You have gone and only said, I'll get a priority booking right, but since I'm booking that platinum box, I can put my company logo over there on a big board. I get priority booking rights for 100 tickets. Will I be a sponsor or not? The way the department says yes, you're getting priority booking rights, therefore you're a sponsor. I'm interpreting this, or that is a submission I'm making before you, that all these 4 activities can take place only when you sponsor an event. They cannot survive in isolation. So for example, when I say sponsorship includes naming an event after the sponsor, which is the person who's sponsoring, displaying the sponsor's company logo or trade name. Can I have a situation where I allow someone to display the company logo or trade name? If it is by itself, it may go under advertisement or sale of space. Therefore, this has to be in the context of a person who has named the event, who sponsored the event as such. Only then the second limb comes after the second comma. Giving the sponsor exclusive or priority booking rights. If I give anyone an exclusive or priority booking rights, here I don't think it can cover as a sponsor. It has to be only the person whose name the event has been named. Or sponsoring prizes or trophies for a competition, again in relation to a person who is sponsoring the event. So my submission is that all these 4 different activities, naming an event, displaying his name, giving him priority booking rights, or sponsoring prizes, can take place only when you have sponsored an event. If I get only priority booking right, or if I get giving only the right of displaying my name when there is a match going on, or only sponsoring a prize, I submit that this is not a sponsorship or does not get covered here under the sponsorship services. If you look at the circulars issued in 2006 and 2010, 2010 was earlier, there was an exemption for exclusion for sporting events. The exclusion was deleted in 2010. At both the times, also they have clarified sponsorship in relation to events. They have talked about events and events. Now suddenly the department has come in and said, you are getting priority booking rights, you are not the sponsor, we agree, but you are getting priority booking rights, pay under reverse charge. You are getting your board displayed, pay under reverse charge. Then every person who puts his board on the boundary will become a sponsor. Why is that not sale of space? That is sale of space. Priority booking rights may be taxable today, may not be taxable yesterday. So here, and this has created some difficulty, and that's why here my submission is, the way sponsorship was worded or is worded, it has to be only in relation to a person who's sponsoring an event. If you don't sponsor an event, you are not falling under the sponsorship. Now sponsorship could be of different kinds. You can sponsor an event. Yes, I can easily say that I can accept that it's sponsorship. What happens when you sponsor someone for, say for example, you sponsor someone for an education or a training. I sponsor you for this educational course. I sponsor you for this training session. Is this a sponsorship? You might still say it's a sponsorship. Why? I'm just giving you these examples because department is now taking a very, a very different kind of a view. I'll just come to that. What happens if I say that I will provide training to you without an event? So I like that you have potential, you're a superb cricketer, I will arrange a cricket coach for you. And then I'll say, but whenever you go on the field, you put my name and you go my company name and go. Am I sponsoring? To my mind, that is not sponsoring. I can understand sponsoring an event will be a sponsoring. When I sponsor you for an educational seminar, an educational course or a training session which is anyway taking place, and I say you go, I'll pay your fees, you might even by a certain stretch of imagination say I am sponsoring. Providing training, arranging for training, I feel you cannot treat it as a sponsor. And slowly we are finding the department is diluting and saying all these kinds of transactions are transactions of sponsoring. And therefore they are leaving or they are attempting to levy tax. So let's look at also the definition of sponsorship. Black's Law Dictionary, of course, not very helpful. One who voluntarily intervenes for another without being requested to do so, which may not be very helpful, but we have the Oxford English Dictionary. It says, a person or an organization who pays for or contributes to the cost of an event or broadcast in return for advertisement. So again, they're saying a person who pays or contributes for the cost of an event or broadcast in return for advertisement. So again, there is an event which they have defined. It also says a person who pledges a sum of money to a charity for another person who has participated in a fundraising event. Again, someone in relation to an event. So my only submission here is that the department slowly is trying to put every kind of contribution and give the color to every kind of contribution as a sponsorship, and they are saying you levy tax on it. For example, for a charitable organization, in the annual souvenir, you give 10,000 rupees. On the last page, they put your details of your company or compliments from so and so. They will now say it is sponsorship because you are sponsoring that souvenir. My submission being that it has to be in the nature of in the nature of an event. Only those should be covered, others may not be covered. And I feel this was discussed by a group, Divane and Parwane. In the first case study, there was a payment to Mumbai Cricket Association. 1.5 crores were paid in 2000 for sponsoring cricket matches for 15 years. You got occupancy, or rather not, were paid in 2000. This was an agreement for occupancy right of the platinum boxes or the VIP boxes. You also get priority booking rights for some tickets, and you can put your big company's name. Now again, both the groups have said this is not taxable because the payment was made prior to in 2000. Under the reverse charge, tax is payable only when the payment is made. Although you might be amortizing this over the period of years, 15 years in your books of accounts, there is no payment made, there is no liability. That is absolutely correct. I agree with that view. Even otherwise, to my mind, I have not sponsored the event. Just getting a priority booking rights because I have a VIP box does not make it a sponsorship event. So if tax is to be recovered, if at all, they need to go back to the Mumbai Cricket Association and recover it and not recover it from me. The second situation is of Sania Mirza. I have sponsored her for Wimbledon. Essentially, I am contributing to the expenses to participate in Wimbledon 2009. And in exchange, she is going to display the my company's name or Generous Limited's name on the kit and apparel. So Group Divane said that this is again, you're not sponsoring an event, you're sponsoring a sports person, and therefore this is not liable. But Sania Mirza could be a brand ambassador, which became taxable only from the 1st of July 2010, and therefore they said this is not liable in 2009. Group Parvane had a slightly different view, very interesting. They said, is this sale of space? Then they said, no, it is not. But in some foreign countries you do have, where people will charge you to wear a particular t-shirt with your name, or put a particular, when they're walking, put a board and put your name or some advertisement on your on that board. I don't know how that is to be treated, but they eventually said that this is more in the nature of brand ambassador again, and therefore this is not a transaction of sponsorship.
The Southstar told you the sale of space means some satellite in the space. If you ignore the first circular of 94, that magazine is space.
Yeah.
So nobody can understand what the meaning of sale of space
Spaces.
You first for a minute take out of your mind the 94 circular that newspaper advertisements is sale of space, not advertisement. If that circular is taken out of your mind, I don't think anybody can attribute any meaning to the word sale of space.
Difficult.
We are so conditioned by that circular of 94, therefore we understand sale of space means advertisement being displayed in the theatre, etc.
No, sale of space also can be looked at from a different view. If I go to an advertising agency, say this is my advertisement, put it up on that billboard, that's an advertisement.
You call it sale of space, sir. You will say call it display of
It's
advertisement.
display. But if I go and say,
sale of space, such a misleading thing, and we are all used to it because we are conditioned our mind to the 90%.
yeah. But there are also certain contracts which say I will take that billboard for 2 months. Then it's for me to decide whether I put up an advertisement or not. Of course, there is a sale of space.
It's a funny word.
There is also payments to the Maricom Boxing Academy for branding and promotional activities, and some reimbursement or some fees for Indian Boxing Federation's membership. Again, both the groups have rightly interpreted that these are not really sponsorship services, they are not in relation to events, and therefore not liable in the hands of Generous Limited under reverse charge.
Pre-2012, no, sir?
Sorry?
These are all pre-2012.
These are also after 2012, because after 2012 only sponsorship services are taxable. So sorry, and after 2012 also sponsorship services are taxable. No, there is no definition of sponsorship now. So sponsorship is not defined. But the question is then, what do you mean by sponsorship? Do you need to restrict it somewhere or not? And therefore, the way the old definition was, the way the Oxford Dictionary says, it is more in relation to an event, and every transaction for which you may not become, or every contribution may not become a sponsorship. The first situation was when you are paying 10 lakh rupees for naming Women's North India Boxing Championship after the founder, Mr. Generous. Clearly it's a transaction of sponsoring an event on which there will be a liability for payment of service tax. Both the groups, Divane and Parvane, have given the right answer. There is of course a mega exemption serial number 11, where certain organizations, when they organize events, there is a sports events, there is an exemption. You need to go and look or examine whether these are covered under this particular exemption or not.
Otherwise it will make no difference on reverse charge, etc. now.
Reverse charge, sponsorship is a reverse charge. Yes.
Therefore it will be relevant.
That's the only reason it's relevant. Serial number 11. 15 minutes. Let's see whatever we can best cover. At least 11, 10, 12 we'll cover. Okay. There is a background to serial number 11. There is a lot of logistics service providers who provide end-to-end logistics solutions. Until the negative list was introduced, how are these services really provided? So you want to move some goods from Nasik to Cape Town in this example. You can go to this 3PL or third party logistics service provider, and you can tell him, I want these services. It's almost, they have a menu. From that menu you can tick which services. You can say, do the land transportation to JNPT, documentation main dekh laga, don't worry, I am a CHA. You take it, then you provide the ocean freight. destination, I have someone in my office who will take care of documentation, but you do help with the customs clearance and land movement, So he'll give you sort of a menu, you choose, pick and choose, and there will be a price mentioned the way it is mentioned over here against each of these. Now, prior to the introduction of negative list, what all the logistics service providers, you are aware that these were getting taxed under different categories. And ocean freight was not taxed. Therefore, all logistics service providers took a stand that each of these line items is a separate service which is granted, and on each of these line items they is to accordingly pay tax. Therefore, all the India services, they were not paying tax. They were paying tax under different categories or as business support services. Ocean freight, they said, is outside the purview of services. We need not pay tax. On the destination legs, some people took a stand that these are actually services performed outside India. Even though I'm billing a customer in India, I will not pay tax. Some people took a stand that since I'm billing a customer in India, I'll pay tax. So some players were paying tax, some players were not paying tax. Thereafter, we had this question of the amendment to the business support service to say managing distribution and logistics. So there was a fear that if I treat it as a single transaction, managing distribution and logistics becomes a single transaction, and therefore since I'm billing an Indian customer, the whole leg including ocean freight will become taxable because I'm not getting convertible foreign exchange. So because of that, this particular interpretation was strengthened and applied by everybody across the board, because you never could afford to pay tax on ocean freight, it would become a very heavy liability. Now the problem is that with the introduction of negative list, what should you do? Should you continue treating this as individual services, serial number 1 to 11, or is it a composite transaction? If you see in your paper book, when that composite transaction $15,000 is for the whole, it covers all one price, one consideration for 1 to 11. It's not separate only for one. I think while printing those boxes have appeared, it's actually one composite fee. So whether you should treat it as one transaction or you should treat it as independent transaction. If you treat it as a single transaction, you can say it is a transaction in respect of transportation of goods, which is taxable according to the destination. Destination is outside India, I don't need not pay tax. If I don't receive convertible foreign currency, it becomes a exempt service. But without an amendment to your contract, without an amendment to your style of working, will you now suddenly be able to say these are not 11 transactions and not only one transaction? If I suddenly change that stand, you will also be exposing yourself for the past, where they will say, why were these not a single transaction in the past with a business support services managing distribution and logistics? So unfortunately today also many companies have continued this particular stand to treat this as independent transactions, because there is an exposure for the past. At that one point in time, there was again the question of whether we could apply section 66F and say that although there are 11 different pick and choose items is done, it's all bundled into one. But here again the question is, and there is a doubt, that when does 66F come into play, as in bundling? If I have 11 line items with 11 separate considerations for each, and there is no interplay between them, that I'm not charging more and less for the, I can pick any one of the 11 or all of the 11, then can I say this is when I'm picking and choosing all the 11, then there is actually a bundling or not? Now to my mind, the concept of bundling will come into play only when there is a single consideration. When you are having an option of picking and choosing a service which you want or you don't want, and a separate consideration provided in your menu, then to my mind you cannot say that just because I'm billing you for 11 activities which I've done or 11 things which I've done and therefore there is a separate consideration, it is a bundled service. To my mind these are 11 services. Only when I'm having this 15,000 as a single consideration and I say I will pick up from Nasik, reach it to Cape Town, then it's a bundled service for the various activities I've done. So that is the way I'm interpreting section 66F. Now looking or interpreting this, if it is a single transaction, then clearly you will be out of the service tax net, there is no liability. But what happens if all of these are independent transactions or independent services? And let's quickly run through them. Serial number 1 to serial number 5. These are all what is called origin based services. All services done in India from the factory to the port. 6 is ocean freight. 7 to 11 are all destination-based services, which are all done outside India, performed outside India. So if I can quickly run through these, land transportation from Nasik to JNPT. And okay, before I go, maybe we can quickly run through the rules. Rule 3 is the general rule, which is recipient-based. Rule 4 is the services in relation to goods, where the goods are required to be physically provided to enable the service provided to provide the service. Loading, unloading, loading, unloading, packing, unpacking, all those kinds of services. Rule 5 is for immobile property. Rule 6 is for events. Rule 7 says that in respect of Rule 4, 5 and 6, services of Rule 4, 5 and 6, you pay tax in the location where the maximum work is done. Rule 8 says that whenever services are provided, Rule 4, 5 and 6 services are provided by where the service recipient and the service provider are in India, then it shall be the location of the service recipient, which is again going to be India. Rule 9 is the special services. Rule 10 is the transportation. Rule 11 is for transportation of goods. Rule 11 is transportation of passengers. So if I look at rule serial number 1, land transportation, it is a Rule 10 service. Destination is JNPT, which is within India, it becomes taxable. Cargo handling, it's a Rule 4A service, because I need to make the goods physically available to enable the service provider to handle the cargo. 2, 3 and 4 are all Rule 4 services, and therefore again clearly taxable in India. Documentation charges at the port of origin, which is India, are again, it's a Rule 3 service, but since my service provider is in India, it's going to be obviously taxable. Ocean freight is a Rule 10 service.
So if item 1 you said is Rule 10.
Rule 10, sir.
And taxable.
Yes. Ocean freight is Rule 10. Destination outside India, therefore not taxable. Cargo handling at destination ports, stuffing, destuffing, loading, unloading. Again, these are all Rule 4 service. Rule 4 is outside India. Now that is where you have a problem. Rule 8 comes into play along with this, which says where the service provider and the service recipient are in the taxable territory, then the place of performance will be the place of provision of the service will be the location of the service recipient. So since I am going to bill an entity in India, although it's a Rule 4 service and it is done outside India, Rule 4 read with Rule 8 makes it a taxable transaction. 7, 8, 9. Rule 10 again is serial number 10 is again a Rule 3 service. You're billing someone in India, you need to pay tax. Serial number 11, land transportation from Durban to Cape Town. It's a Rule 10 service. Now you have Rule 8 and Rule 10. But Rule 14 says whenever two rules come into play, the later has to apply. Right? So Rule 8 is there, Rule 10 is there. So although I am billing an Indian entity, in view of the fact that it is destination based, Rule 10 will survive, where the destination is outside India and therefore not taxable. So serial number 11 is not taxable. This is the kind of difficulty you are having, and therefore all these 3 peers are finding it difficult to discharge their liability. Some transactions suddenly become taxable, not becoming taxable. Now so long as this case study goes one step ahead to say that so long as the destination based services are concerned, the Indian service provider will not perform this. He will get somebody to perform this from outside India. So he is going to pay part of that consideration to a service provider outside India. And what happens to those services? Does he have to pay tax? Again, if you look at Rules 7, 8 and 9, Rules 7, 8 and 9 are again Rule 4 services. There Rule 8 doesn't come into place because the service provider is not in India. I am the service recipient, or movers and packers is the service recipient, and therefore on the expense side it's not liable for payment of service tax under the reverse charge because it is performed outside India. Are you with me, or are you now tired? Yes.
The Rule 10 is not the destination of goods, it is a person liable to pay service tax.
Transportation, GTA. You're talking about 11. Yeah. So 11, what happens? Movers and packers is not going to issue a lorry receipt.
On very first number only.
Yeah.
You stated that rule 10. It is the destination of the goods.
Yeah.
It is not correct actually. For transportation, person liable.
Okay. Sorry. Let me clarify this. When a 3PL provides services, 3PLs are not transporters. So I've gone on that assumption because they will not issue, they will engage a transporter and they will engage various entities to perform these 11 activities. They will themselves not be transporters. So a 3PL will engage a transporter to move it to JNPT. He will pay under reverse charge. But when he bills, he'll have to again pay tax. That is the assumption and that is the structure of the transaction. And that's why I am not considered GTA.
Transportation of goods by road is again exempted by the either negative or mega exemption. If you are not ETA, the transportation of the pure by the road.
Then there is an exemption in the mega. Yes, I have missed that. Correct. There is an exemption in the negative list. So it's a rule 10. However, there is an exemption. I stand corrected to that extent. There is an exemption in the negative list. I'm sorry, I'm running a bit. We have got only about 5 minutes now. Rule 10. When I'm engaging a foreign entity, serial number 10, when I'm engaging a foreign entity to help me with the customs clearance or the documentation charges, these are rule 3 services. And therefore, whatever he charges me, I'll have to pay under the reverse charge and claim a Senvat credit and bill my customer in India. Similarly, land transportation from Durban to Cape Town, again it's going to be destination outside India. So when that person charges movers and packers in India, they are not required to pay under the reverse charge at all because the destination is outside India.
Or because of the mega notification serial number, he said. Both also.
Or both. Whereas serial number 10 anyway it goes out. Rule 10 it anyway goes out. I stand corrected. Thank you Naresh bhai on that. So we'll take serial number 12 and I think we might have to close after that. Serial number 12, quickly. So issue 1 is really whether the out-of-pocket expenses which are reimbursed forms part and parcel of the consideration or not. We have this decision of Intercontinental where they have said that the out-of-pocket expenses for air travel and hotel obviously will not form part of the consideration. They are cannot be considered as gross amount charged for the services and therefore not liable. Now to my mind, while Intercontinental is correct in its own way, to my mind you also need to bear in mind how your agreement is structured. Does the agreement make it obligatory on the part of the service recipient to arrange for everything, which is to say, for example, I am a chartered accountant providing an auditing service in Mumbai and I say I will provide these auditing services in Mumbai. He has a factory in Ahmedabad and therefore he makes me go to Ahmedabad by flight and hotel and I say I will only charge you 1 lakh rupees for the audit fees for all the work to be done here. Anything traveling is your headache, you arrange. If he tells me to arrange, then I will arrange and claim a reimbursement. To my mind, I can then take a stand and apply Intercontinental to say that yes, it's not liable for payment of service tax. The other way is that if they say it's 1,25,000 rupees, you have to arrange everything. Then if I charge him, then it is my responsibility coming within the scope of my services that I will also include 1 trip or 2 trips to Ahmedabad for the purpose of the audit. And then if I say, okay, I'll bill you 1 lakh rupees and 25 separately based on my submission of my vouchers, then to my mind clearly it has to be added. So again, if you want to really get into this argument of whether it's to be taxed or not taxed, it's going to be how you're going to word it. And you need to word it in such a way that is not an obligation or not required to be arranged by the service recipient or service provider. It is the obligation of the service recipient. Only then you will be able to go out of this particular liability. Practically, as most of us really the nature of the services we provide and many other consultancy services, is very difficult to document what is to be done and not done, and therefore you will always get into trouble. So practically what we always do is always continue to levy tax and not perhaps follow Intercontinental.
And I'm also not sure that it's fully correct also.
There is, yes, doubts have been doubts have been expressed on that. Yeah.
Not fully correct.
Okay, sir. So that is, as Sridharan sir says, not fully correct. So I would at least advise then practically we continue levying the tax. Please don't stop. The issue has also come, and I also saw in a recent matter.
When you book the client's ticket, for the UK judgment says client's ticket you booked and got reimbursed, that we will not.
That we will not tax.
But your ticket you go to Amsterdam, your London solicitor going to Amsterdam, which is the client's premises, clearly considered to service.
Is for the service. But sir, what if my service is, I was obliged to provide the service in
Whichever way
London?
you get it.
Either way, they say it's taxable.
If he buys tickets and gives it to you, it may not add it.
There's no question.
But if you recover from him, separate item, this item, etc. I'm interrupting because it may personally affect you. That's the reason I'm saying.
Agreed, absolutely.
Forget about the clients. Our first interest is
All of us, yes.
Your service starts when you leave your home.
But if I'm obliged to provide service only in Mumbai, and then he's asking me to go, is a term of service. So there will be disputes, and therefore, yes, you might have to
proceed on the footing intercontinental
doesn't exist and pay tax.
in your personal affairs.
Now,
Cost defending is one. For future planning
is difficult. Now the other situation which has arisen recently is that where there is a foreign management consultant who has come to India for a work. I arrange their hotel in India and they travel. The department is saying that if he had arranged, you would have paid reverse charge, you also add this for payment of reverse charge.
That's purpose.
So there again they are going to one step further to say that even the expenses which you as a service recipient incur, you need to add it back. So that was the background for, I thought we should have this short discussion on this. At least to the extent of foreign service provider, for reverse charge purposes, expenses incurred by us in India obviously will not be required to be added. The other issue 2 and issue 3 are in respect of work undertaken by a branch or a liaison office. Now when there are, we have a situation where branch is having various expenses on its own, and and the head office in India will remit some funds to enable the branch to meet its expenses. The question is whether these will be in the nature of services and the head office needs to pay reverse charge on these services or not. Also, the branch may be serving some of the customers of the Indian entity, and therefore the question is, to that extent at least you need to pay reverse charge on tax under reverse charge or not. Now, so far as the branch expenses in this issue number 2, serial number 1, which is operation expenses of salary, cost of the employees and office rent, and other expenses exclusively required for the branch operation. To my mind, these are actually expenses incurred by the branch for its own existence, and even if money is remitted, when money is remitted, this is only actually a funding requirement, remittance of money on which there will not be a liability for payment of service tax, and there cannot be a reverse charge liability thereon. So I'm quite clear about this. Even otherwise, I will have an alternative argument to say that if you want to invoke the provisions of reverse charge, then there has to be receipt of the service in India. Even under the earlier import of services rules, also under the present reverse charge, it talks about received by a person in taxable territory. Now here is a situation, I will say that all the services which my branch has received, I mean received by them, have been consumed by them. And I am not received, I am only remitting money to enable them to meet their expenses. There is no receipt of services in India, and therefore to my mind I will not want to levy tax on this or no pay tax on this. Now what happens in the situation where the branch is serving some of my clients? So say I am a management consultant, I am having a client in the UK, and for the UK client I have a contract for providing some management consultancy services for say £100,000. Out of this, I ask my branch to depute some of the people on site who will work at the office of my client, and say the extent of the work done by the branch is going to be say worth £40,000. So £60,000 worth of work is done by India, £40,000 is work done by UK, and I will from India raise an invoice for 100,000. Now the question is that what will be how do we value the services? Is there, or there are two ways of looking at it, that India has provided services worth 60,000, the branch has provided services worth 40,000, or the other way of looking at it is that whenever the branch has done the work, they have done the work done for India, and therefore India has received the service undertaken by the UK branch. India should pay under the reverse charge, and then when they bill 100,000 to the UK customer, the 100,000 will be an export of service on which they will be entitled to claim an export benefit of export of service, and therefore a corresponding refund. So this sometime back was discussed in the decision of Tech Mahindra, I think in March 2013, where it was a limited point in the context of in the context of export of services and prior to 27th of February 2010 and after. What the Mumbai Tribunal said is prior to 27th of February 2010, we had this condition which said provided from India and used outside India. And here was a situation where the UK branch, there was a customer of Tech Mahindra India. They had a branch outside India. Some work was done by the branch, some work was done by by India. And they said that if branch, in this example, just to take an example, if branch did 40,000 pounds worth of work, India did 60,000, they claimed an export benefit of 100,000. To say, I received 40,000, they paid reverse charge, and then they claimed an export benefit of 100,000. The tribunal said that the condition for export says provided from India and used outside India up to February 2010. To the extent of the work done by the UK branch, this was actually provided from UK and done used in UK, and therefore you cannot get the benefit of export. Your export is only to the extent of 60,000. Of course, then they also have made a mention to say there could be another question which will arise, that if that service of 40,000 was done in UK, from UK to UK, then I shouldn't have paid reverse charge. They said, but this argument was never made. This argument was never made at an adjudication stage, so we will keep it out. That means effectively that money they might have lost it, because the 1 year time barring may have gone. And now to say that this export benefit is not available. So that is one way of looking at it. Well, the way I interpret this, and I have a slightly a view which is a little different than the tribunal's decision. I felt that now that we have the clear provision which says that the branch and the head office will be treated as distinct entities and for distinct establishment, even when a branch is undertaking any work in respect of a contract undertaken by the head office in India, this should be treated as services received by India, pay the reverse charge, and then claim it as an export. So I think that would be a better way to treat this transaction so as to complete the circle. Of course, the other way of looking at it is to treat it the way the tribunal has held, that you take it as only split the two turnovers into 60-40 and say India's export of only services worth 60 and 40 is an out-and-out transaction. But my interpretation is that is going to be a better interpretation to take in terms of the compliances. Thereafter, the question was the tribunal also discussed the situation post February 2010, and you recollect in February 2010 they deleted the condition provided from India and used outside India. There they said that since this condition is gone, your export is worth 100,000. Now again, that is a dichotomy, or I would say a deviation of the tribunal, that if in the first case you say service never came in to go out, just by changing a condition, how do you say a service now came in and went out? Because the service remains a service. A place of provision will remain a place of provision from to. Just by changing one condition, you cannot now change to say just because I billed from India, I provided from India. In that case, even after February 2010, they should have taken a stand that yes, going by the logic, you still have to pay get an export benefit only on 60,000 and not on the full 100,000. But there again, they have stepped forward, and then I would say somewhere created a disconnect by saying now with the deletion of the condition, you can now claim a full export benefit of $100,000 in the example I gave you. So again, they have gone a little beyond this aspect, but I feel that considering this is should more appropriately be treated as a receipt of service in India and an export from India. Going to the issue number 3 in the same case study is a similar situation, but the question is in respect of a liaison office. Now friends, what has happened is why this liaison office issue is now suddenly creating a problem is everywhere where we look in the earlier provisions as well as the new provisions, which they talk about treating the the establishment, Indian establishment and the establishment outside India as distinct. They have somewhere brought in the element of business. So if we look at the definition of service, I'll quickly take you through explanation 3b. Says an establishment of a person in the taxable territory and any of his other establishment in a non-taxable territory shall be treated as establishments of distinct persons, which is fine. Explanation 4. A person carrying on a business through a branch, agency or representational office in any territory shall be treated as having an establishment in that territory. So here again they are saying business. If I am not undertaking a business, then I will say you are saying it's not an establishment in that territory. And that was similar was the word, if you turn a few pages under section 66A. 66A up to 2012. Same page. For me, the next page, sir, sorry. It says, where the provider of the service has his business establishment both in that country and elsewhere. The country, sorry, I'm reading the wrong one. 66A2. Where a person is carrying on a business through a permanent establishment in India and through another permanent establishment in a country other than India. Such permanent establishments shall be treated as separate persons for the purpose of this section. So you need to undertake business. Now 66A is carrying on business, and of course now it is saying carrying on. Both are saying carrying on business. So the question is that when you have a liaison office, will you be treated as separate person or the same person? First question. Second question: if you are not treated as separate persons, then will you have to pay tax under reverse charge for all the expenses undertaken incurred by the liaison office? Because then even if there is a management consultant who provides some assistance, or an advertising agent who provides certain assistance to the branch, they will say you receive the services, you will pay under the reverse charge. Of course, if it's rent, you will say it's a 4A, I need not pay service tax. Sorry, it's a Rule 5 service, I need not pay service tax. But that means every expense needs to be classified by the place of provision of services rules, and then you determine whether you need to pay tax thereon or not. So now the word business becomes important to determine whether that constitutes a separate establishment or not. To my mind, when it comes to a liaison office, what does a liaison office do? The function of a liaison office, one, you need to take a permission to set up a liaison office in India as well as abroad. The liaison office essentially will be doing some marketing activities, will be doing some business promotion activities. They'll go and meet some prospective customers. They'll help establish connect between the Indian head office and the customers. They may undertake some branding exercise. They may undertake some sponsorship exercises. They may undertake some conduct some seminars and things like that. So all of these activities are undertaken. And since the business is not defined, I feel the activities done by a liaison office also in a way is an activity in relation to business, or constitutes an activity comprising in a business, and therefore when it is carrying on a business, it is not doing it for fun. These are all business activities, business expenditure of India, and therefore I will argue that the activities of a liaison office are in a way a business in nature. They are not. When you say business, it doesn't mean business of actually trading and providing services or buying and selling goods. And maybe business or marketing is a transaction in the nature of business also, and therefore you need to treat it as distinct transactions distinct entities at par with a regular branch which is actually providing services or buying and selling goods on your behalf. And therefore you will have to also treat this as any other branch. The answers which I gave for the previous case or issue 2 should hold good over here also. That's what I feel. Yes, sir.
68.2 earlier had the word permanent. Now in explanation 3 the word permanent is.
Sorry. Permanent establishment, yes.
What's the difference, sir?
This
permanent.
Sir, okay.
Yes, the word permanent.
So, I felt that the word permanent establishment is not read in the context of what we call under the Income Tax Act. A permanent establishment means a fixed place of business, more akin to a fixed establishment the way it is defined under location of the service provider or recipient, where you have an office, you have some staff, you have some activities which are undertaken. And therefore, I am interpreting the word permanent establishment as an establishment which is having some permanence and not just someone who is visiting.
What's fixed establishment is?
So fixed establishment is now this word permanent establishment is we have fixed establishment after 2012.
There's a mess in the section. You don't be.
No.
The problem is not with you.
No, that's not. What I'm saying is now after this I'm reading permanent establishment similar to fixed establishment. I'm in a way equating them.
Just 1 minute, Krishna. This is the point. I'm told hundreds of notices are being issued in Pune or something. I'm not saying I'm right in that. What Parind said about permanent establishment, we should not import income tax concept. Okay, that's one view. In fact, there's an ECJ judgment saying so, that income tax concept of permanent establishment is not relevant. Okay, I don't agree with that. This section is a section which imposes a levy. Okay, it's a charging section. Therefore, should be strictly construed. It's also an artificial provision. Who are not different entities, it deems to a same entity, different entities. Plus, the legislature uses different terms in that section: fixed sector, business establishment, permanent establishment, branch, etc. So these cannot be treated as a loose and careless drafting. We must assume that it's been drafted with precision and care, and therefore they are different words. What the meaning of permanent establishment is a different question, but you cannot be treated on par with business establishment, fixed establishment, and therefore ordinary connotation of permanent establishment is not by a special meaning Income Tax Act. A country of residence, the head office is never treated as a permanent establishment. The word permanent establishment has obtained a technical meaning, namely in the country other than where you are incorporated. So Indian companies having branches outside India will not treat it as branch vis-a-vis head office, will not one permanent establishment, another permanent establishment. That's the point we want to develop. If Citibank Singapore renders service to Bombay Citibank, vice versa, they may be. But Tech Mahindra India Limited, which is an Indian company, has a branch abroad. India cannot be called permanent establishment. Branch may be called permanent establishment, no problem. One permanent establishment to another permanent establishment should not be covering such a head office of the branch.
Sir, I only wanted to draw my attention. This is A2 in the earlier section. The word permanent.
Earlier section only.
That time the word permanent was there.
Now, no. This argument, what we said is pre-July 2012.
Yeah.
Now the word is only established.
Established.
Yes,
Established means person and place. Two things should be there for establishment.
Well, I think with that, Krishna sir, shall we close? We can. Yes.
Maybe the license office, your answer, maybe different.
Will change.
Yeah,
May not be liable. But post, I think, perhaps.
Will perhaps then
What
change.
is developed.
Correct.
So
So
I also want to say, the word permanent was there before. License office will not consider.
correct.
Now, the word permanent is removed.
So, in your view, with that change of permanent, earlier a license office expense may become taxable. Now it may be safer to say it's not taxable.
What I want to only draw is that when the word permanent is significant because it means there is some degree of permanence.
Yes.
For a limited purpose, an office is open and there is an establishment of place and two things like that, place and people will establish. It may not be done because there is a degree of permanence. Unless there is a degree of permanence, it may the intention is not to come.
Yeah, but if it is read
Prior law,
under the prior law, but as a degree of permanence, also a liaison office may have a degree of permanence in terms of certain activities. You know, yeah. So
there is some license office with no degree of permanence.
that's true. Yeah. Well, I think we may skip over the remaining questions. We may take another 15-20 minutes, but shall we close with that? We are already beyond 20 minutes.
Yes, close. Sorry.
So
We are
what?
losers.
I prepared and I could not talk. So what I can suggest is if anyone has questions, we can take it during the lunch break so that we don't delay everyone. We can all thank you.
Parind, that was a great marathon session, master blaster I would say. I think in the 2 hours, it was, it reminds me of, that NTB airport, there was, if you remember that, in 60 minutes at NTB airport. So this was 120 minutes, fantastic. I think he's dealt with, while there was speed, there's also great clarity. And I think one more thing I noticed which I must learn from him, all the rules, sections are all at his tips. He doesn't have to refer anything. Whereas we have to keep reading. So there's a fantastic delivery. We are totally obliged to you. Though 3 questions have remain answered, we will ensure that we are not losers in 2 ways. Maybe lunch, there's one thing, and we might try to call him time permitting in a study circle where we can deal with these three things depending on his convenience. Yeah, thank you very much. But wait, there's a word of thanks for Parind, well deserved. Plus there's a short conclusion session. I know you have endured for a long time, but please another 15 minutes and we'll close it.
Thanks. But before that, there are some announcements. You have been given the feedback form. Please spare some time and give it after duly filled in. Don't blank, duly filled in. Give it to Hiten Bhai or Anand of our chamber so that we can, do the better work next time. Secondly, we'll be failing in our duty if we do not facilitate our very hard-working, group leaders. And I will start with the ladies first. Payal, please come. Payal Shah. And Parind, I will request you to felicitate her with the memento, please. Another very young and dynamic group leader, Yas Jada from the Jaipur. Yes, I was in his group. He led such groups in such a great manner. I really become fan of yours, sir. And thirdly, I will call our very seasoned group leader. I will not call him Mr. Sanjay Burad. It's a Dr. Sanjay Burad. Please come, Sanjay. This gentleman has done the doctorate in service tax. That is, something, credible. So now, we have to wait for, after the vote of thanks, you have to wait for the concluding session. I will, about the vote of thanks, Parind Bhai, what Mr. Krishnan says, marathon paper, dealt with masterly manner. Secondly, it's like, every good lunch ends with a great dessert. I will tell his paper was a great dessert for all of us. So, just carry out with a loud applause. We all are thankful to you, Parind Bhai. And I will request office bearers to please take over the chair for the concluding session. It will, I think, they would request, they have told us it will be completed in 5-7 minutes, correct? Please. Yeah. Thank you very much.
Good afternoon, friends. Every good thing or a bad thing has to come in, and this is my normal remark I pass on a concluding session. During these last 3 days, we had a dip in a sangam of education, entertainment, fellowship, and leisure. Friends, more than one delegate had come and told me during these last 3 days, and those are the senior delegates, senior in the sense that they must have attended many RRCs, and not only in chamber but other organizations also. They said that Yatin, as a president, you look very relaxed. And the entire credit goes to the team of Ashit and with the guidance of Mr. Krishnan. I would request you. Thank you. They have taken the minutest care. And friends, there must be still something remaining, and your suggestions for that will be very important for us. I would like to call upon some of you and request you to come here and give your suggestions, because these suggestions will not only help us in this RRC, but the chamber is arranging more than 3 RRCs in a year, and more than 400 people take benefit of this, and this benefit will go to all of them. Thank you. First, I will request Pankaj Bhai, the president of STPM, to come forward and say a few words. Thank you, Pankaj Bhai, for attending this RRC, taking out the time from your busy schedule. Thank you.
Thank you, Nitin Bhai. First, let me congratulate Indirect Tax Committee headed by C. Ashit Shah and his team for successfully organizing this second RRC on service tax. All the papers were excellent, the speakers were experienced, and the venue and other arrangements were also excellent. I always, this is my second RRC on service tax, and because of there is a pressure of VAT audit also, I came to this RRC because I always see that the chamber is always taking hard work for organizing such RRC, and that tempted me to attend this RRC. And I also thank chamber for inviting me to express my views. Secondly, we have also organized workshop along with the chamber, BCI WRC, that is starting from 18 January, and that will be on the indirect tax, including service tax, VAT and LBT. The LBT is important area of practice. So I request you to join this workshop. It will be held at Majgaon Celtex Library. Thank you very much.
Thank you, Pankaj Bhai. Anybody else would like to come and view the, please introduce yourself so that everybody knows who's giving the suggestion.
Friends, myself Satish Bhup from Nasik. What I want to say is that our CTC, BCAJ and STPM, all organizations are always conducting RRC or NRRC. I would like to request to all the bodies to organize such events which should not overlap each other, so that we people can take enjoy and the participation in all of those. Because see, in the next month our STPM is organizing at Jaipur, simultaneously RRC on direct taxes of the CTC is coming to Panditri. So these two eminent events are coming together, and we would like to share only one, and we are compelled to sacrifice the other. So I request honestly to all the bodies to keep distance between two such mega events. And friends, थोड़ा सा जाते जाते रिलैक्स कर दो आप लोगों को कि ये जो RRC है इसके बारे में, और ये 3 दिन में हमने क्या कमाया सबने, यानी हमारे ग्रुप लीडर्स, हमारे पार्टिसिपेंट्स एंड ओवर एंड अबव आवर फैकल्टीज. सूरज को मुट्ठी में कर लिया है हमने, अब हाथ जलने की बात कहां आई है. कानून की किसी भी धारा से असेसी को बचाने का हुनर सीख लिया है हमने. तूफान में कश्ती को उतारना सीख लिया है हमने. अब कश्ती डूबने का डर कहां है दोस्तों. हौसला इतना बुलंद है कि सागर को पीना सीख लिया है हमने. और जाते जाते कड़कड़ाती बिजली में घर में दुबक के बैठना आता नहीं है हमें. हम किसी बात से भी डरते नहीं है. और आज की इस आरआरसी के बेजोड़ कामयाबी से बिजली को अंगूठी का नगीना बना लिया है हमने. थैंक यू.
Thank you, Satish bhai. Yep.
Friends, I would really like to compliment the organizers, especially the chairman, Mr. Ashit Shah, and Yatin, the president, who is a very dear friend, for organizing such a wonderful RRC. This is, I'm a member of Chamber for the last more than 15-20 years, but this is my first RRC where I'm attending, organized by the chambers. Certain things which I really liked and appreciated about the chamber was the Of course, it goes without saying that the venue, the faculty, the selection of speakers was absolutely excellent. But certain things which I really came to my mind, I really appreciate is that at the time adherence to time of each and every session was so particular that at dot 8 today also 8 it was very early. I have found it very early, but still at 8 o'clock practically almost everyone was in their respective groups, the group leaders, the mentoring, everything had started. So I really appreciate that. And even those who were not there was someone who was ringing the bell, so sort of classroom kind of atmosphere, but still yes, people felt yes, now they need to go back and be back in their group. So I really like that, and the best part was having a mentor along with the group leader, which was really the very good support to the group leader also, and he could balance everything wherever he thought the group was digressing from the main subject. So I really appreciate that and congratulate for that. Just a couple of suggestions. One thing is the paper was certainly very good, but I would suggest if you could, instead of using a glazed paper, if a normal paper is used, because writing with pencil, marking on it is really not comfortable, and using gel pen also. So it is one thing that I would like to give a suggestion. And second thing, for the group leaders today, after the group leaders, the GD was over, there was another session, the group leaders had gone to the paper writers who were reporting. And when they returned, unfortunately there was no seats available for them in the front. They had to search here and there, or maybe sitting in the last also. So at least I think you should see that at least the group leaders were doing such a good job. They are given a place in the front, at least in a way of recognition for their efforts. This is the only one I would like to make suggestions. Thank you.
Thank you, Saurabh. Thank you very much for the suggestion. Yeah, please.
Good afternoon all of you. I am Yash Radha from Jaipur. This is my second RRC of CTC. I came last year to Gurgaon for the general RRC, and that was my first year of membership of CTC. And at that time I decided whatever will happen, although my area of subject is service tax, I just attended to get a feel what RRC is of Chamber. And I said it last time also, and I'm saying it again on behalf of all those people who are in Jaipur. I like the concept. We try to put that in Jaipur, and we're not only benefiting all those people who come here, but by applying that concept, we try to do that in Jaipur, and we did it thrice in 1 year, and approximately 250 people were benefited outside the ICA branch without having any study circle or anything, and all of us enjoyed it. So thank you so much. And one very good thing which I liked here is that people here are so receptive that you can walk up to anybody, you can ask anything. To people like me are so small and we are like infants in the profession. It gives us huge courage to do whatever we want to do. And just one thing, I said it last year also, just good, better, best, never let it rest until your good is better and better is best. Thank you so much.
Thank you, Yash. Yash, you are a rising star, so you're not an infant. Sridhar sir, would you like to say something? Okay. Mr. Sahu, Parind bhai? Okay. Anybody else would like and suggest something? Please volunteer, sir.
We want Ashit bhai to be a permanent chairman for us.
I don't mind making him chairman for all the 3 RRCs. Okay. Okay. Now I'll hand it over to the chairman to take the proceeding further. Thank you.
Good afternoon, friends. I will not take more time because I know that there is a lot of delay is there and lunch is waiting for us. Our president has said that in these 2 or 3 days RRC we have learned a lot. So we have taken the education, we have done the entertainment by playing cricket and by dancing in the DJ yesterday night, and we have also take the leisure. So I have coined a word that in these 2.5 days it's an edutainment thing. So with an education there was an entertainment as well as leisure. So in these 2.5 days it was an edutainment program which has been conducted by us. What we have done in these 2.5 days? We have gone through the group discussion wherein 32 main issues has been discussed. Apart from that 32 main issues, they have various sub-issues were there. And the group leaders and mentors has very well done their job. And the outcome is that there are numerous views which has been emerged and available to all the participants. And I'm sure, and to add that, the paper writer has also added their views, and this has, I am sure, definitely that everyone who will now parted will carry them and that cherish these memories. Now I would be failing in my duty that this grand success which I can foresee could not be possible, and therefore I must thank and congratulate to all of them. First and foremost to my managing council team and the office bearers, my president Yatin Bhai, office bearers Hitesh Bhai, Hinesh Bhai, Avinash and all other, that without their support and encouragement this could not be possible. Because this is the chamber has taken, as I have said in my opening remarks, that it is an endeavor of chamber that whenever anything new comes, they would take a first lead and to roll the thing, and that is how the first RRC was there, and consecutively now they have understood the importance of the subject, and now I think this would be a permanent feature. Next, my thanks will go to my IDT team, whole IDT team including our advisor Mr. Krishnan, because without their support and that vision, it could not be possible. The whole program including the selection of the paper, subject or say a paper writer, everything has been designed by Mr. Krishnan and including the time thing. So sir, I am very much thankful to you for the wonderfully and masterly designing the program.
Actually, let me correct. I think that wouldn't be true. That was a democratic decision by the entire indirect committee.
I understand.
I only given my inputs. That it would be, I shouldn't be taking credit for the entire thing. So it's the entire team. The only thing, the interaction with the speaker was restricted with me and Rajiv. That's all.
Sir, the leader is always to get the priority.
It's a committee decides the entire, what should be the content, what should be the topics, and what is. So I shouldn't be taking the entire credit. But okay, whatever little input I have given, also give.
Thank you, sir. Third is to all the paper writers and paper presenter. They have spared the time. They have write the paper, because nowadays it becomes very difficult to write the paper, take out the time from the busy schedule, and the paper writer which are coming from Delhi as well as Bombay for just to attain to deliver for 2 hours or 3 hours. Really sir, we are very much highly obliged to you, and we are looking forward to you in the future also. Next for these 3 days, these hotel people are serving the best services, whether you say food, right time on the tea, snacks, lunch, dinner, which has been provided to us by this Laguna Resort, and for that we have I would like to invite Mr. Sudhir Panda, who has provided us an very untiring services during these 3 days. So I will ask Mr. Sudhir Panda to please come forward. सुधीर जी, आप कुछ बोलना चाहेंगे तो?
Very good afternoon to all my VIPs and all ladies and gentlemen. Actually, we are all trying to our best to give you best service and also the good food. So that's why we are trying to testing the food first, and our sir are also very cooperative. And it would be our pleasure if you coming again and again. And thanks a lot for us.
Now I would request our President Yatin Bhai to felicitate Mr. Sudhir Panda. Sudhir. Thank you. Then another support is required from the administrative staff. All the printing of the booklet, distribution, then traveling arrangement, all the thing has to be groundwork, logistic arrangement who has to do, has to be done by our back office staff, and for that I am really thankful to the whole staff of the CTC, Mr. Hitesh Bhai, Anand. We are sir very much thankful to you for giving an untiring support to us. And last but not least, my team, my Vice Chairman Pranav Kapadia, my Coordinator Alok, and Narendra Soni for giving the best thing too. Now, I think it's time to part. If knowingly or unknowingly, if I have been hurted you in this past 3 days, then please apologize, pardon me, and really thankful to all of you for giving a patient hearing in all these 3 days, giving your full support, and thank you very much. Kamdar Sahib wants to say something.
You want to have the last word?
Last word, sir.
Friends, Ashish has thanked everybody, but I think it is our bounden duty to thank Ashish for organizing such a wonderful. Thank you.